Close to me.
Stay close to me.
Close to me. And now, for the thousands in attendance and the millions watching around the world, ladies and gentlemen, let's get ready to rumble!
Greetings, traders! It is I, Abdul Shabazz, and this is some real change stock options trading journey. Thank you for being here today with me this magnificent Monday, March the 16th, as we get ready to do exactly what we love. Big shout out to the team. Quiet Souls in the building. Todd Macon is in the building. Jared Lewis is in the building. Nkosi is in the building. Jesse Swanson is in the building. Big shout out to those of you who are also joining us on Kick, as we are kicking it with you today live on the Some Real Change channel, streaming as well on Kick. Now, let's get to the plans for today. Very extensive plans I have for today. Very extensive plans I have for today. Alrighty. 2 potential calls, 1 potential put. Potential put I'm looking is to get, when we hit that, here we go, 666, looking for a 668 strike, 666 entry, adding at 664, first profit target 6623, second profit target 6615. You see me showing that here, right here on the trading view chart, so you can see exactly what that does look like if the market does give us an opportunity to take that trade. I've already shown you we're in a larger controller selling algo, but this morning coming into the market, there is a potential buying algo. We identified it because of the action pre-market, and if it does go higher, we're looking to short potentially a lower high. Okay, if it doesn't, okay, and it does drop, then I'm looking to take that put at 668 strike, 666 enter. I want to add to that position at 664, and I'm looking to exit around 662 and then 661. Once we get to 661, that is a sweep area. That is a sweep area. So there I'm looking for a call at that 661.5 with a 660 strike. 664 profit target coming back the other way. Let me go ahead and identify that here on the chart as well. 661, round up in here. Alrighty, round up in here. If we do come down, stop. Looking to take that like right up in here. Possibly, that's what that could possibly look like. So we'll just have to see. Let me show you what it looks like on the trading view chart here as we get closer to what is actually taking place right now. Okay. Right back to where she is now. If we get that drop down to that sweep area, okay, then I'm looking to take a call if we get bullish presence that steps in very hard with a very clear reversal signal, then I'm looking to take a call there. So that's why I have 2 calls this morning. One call at the 672 if we continue this extension. If we do continue this extension, the higher we go, the more bears will start to cover. The majority of the bears will start to cover at the 662.4 area, and that's where I want to take a call where bears are covering. Bear covering is buying. I then want to join Team Bull as the bears cover and take a call and try to go all the way up to 675 too, and then possibly 677. That is what is on the horizon. The only thing I didn't do is come up with a put if the market should put in a lower high and then decide to come down. I'm still very happy if it comes down and I grab it at that 666 area, as this morning bulls will be used as momentum, okay, to take the market lower. So as this candle that you're looking at right now, if this candle gets in trouble, this pre-market candle, if they have to cover, that's where I want to start looking to get in a put where bulls have to cover. Bull covering is selling. Selling takes the market lower. That is the color chart that I use to illustrate my plans on TradingView. Again, I just use this to illustrate what my plans are. Simply, sometimes it's just as easy as following your colors, Abdul. Not a problem. Now, the market is coming out looking very strong this morning, but who knows? It's Monday. Let's take our time. You know, the first 5 minutes very volatile. First 15 minutes typically can trick you. Let me go ahead and highlight this real quick and pull my plans back up yet one more time. For that call, I have an alarm at the 670.8 area, knowing that as we continue to go up, we put pressure on Friday's bulls. The cup closes at 672. If the cup does close, we can expect a little pullback, and then a break and retest is where I would like to get involved with that call at the 672.4. It would have definitely proven itself, creating a beautiful uptrend if it should continue with market open. Again, we don't predict, we observe, and then we react. If the market does come up to 642 and does a break and retest, then I'll get in it for a call. If it does not, potentially that might be the reversal that we're looking for. But if it comes all the way up to 672 and we get a pullback, that would just be the handle off this cup that gets closed. So I will be patient on that and wait until we break above and retest to commit to that call. Now, if she doesn't get up there, I have an alarm here at 670.8. 670.8, where I have this line, is also where potentially we could see a lower high and then the market come back down. Well, if that's the case, like I said, I want to use these pre-market bulls right here as my liquidity to help me take me to the bank. So I have an alarm here at 666.12. If we come back down to 666.12, then I will take a put. That goes right in line with my puts here. 668 strike, 666 enter, 664 adding and coming on down to 662 and then 661.5. These are the plans. The alarm is set. The only thing that is left now is patience to see what takes place if the market should hit one of these alarms. That is my pre-trading game plan. And once the market starts, I like to call them my rules. Don't forget, it's Monday. First 5 minutes, very volatile. The first 15 minutes can possibly trick you, have you thinking the market is going one way and then completely go in a different direction. Give the market some time. Let it work itself out. Let the algos kick in where we can identify that. 80% of trading is done through high-speed, computerized, algorithmic trading. Once we figure that out, that now gives us the edge. We see where they want to take profits potentially, where they would have to cover, and where they would have to stop out. Those are the two areas that we look for here on this channel: pain and pleasure. Where are you enjoying these profits and want to put some in your pocket? That's where you find me. Where have you got into an uncomfortable situation and you need to get out of it? That's where you find me. I leave alone everything in the middle. I'm perfectly content with that as we look for the easy money. And it's there. All that's required is patience. Patience pays. Big shout out to the team. Thank you so much for tuning in. And if you see something just a little bit different than I do, please feel free to share it in the chat. And if you want to call in, let me know. I have absolutely no problem letting any member of the team get on the microphone and talk to the team to let us know something, to warn us about something, or to point something out. You may hear my voice, but this is absolutely a team effort. And I do appreciate you all for showing up and then showing out when the opportunity does present itself. Big shout out to you, Daced, D-A-S-E. I can't pronounce the last one, so I'm going to just leave it at that. Tuning in on Kick as we continue to talk about money. Who has it? Where is it? And how can I get some? Again, going back to the daily chart, want to highlight what I've highlighted all last week was that we were in this larger controlled selling algo. Okay, let me go ahead and make it just a little bit more eye appealing. Give me 2 seconds. 1, 2. And here we are. We are in this beautiful controlled selling algo. This is days and days and days, weeks and weeks and weeks. After the high of the 697.8, we put in a double top. After that double top, we put in a lower high, lower low. And then another lower high and another lower low, another lower high and another lower low. This is a downtrend. We are red for the year. We are red for the year. Don't get it twisted. Don't get it miscrewed. Every potential pop could be a potential short until we break this controlled selling algo. This controlled selling algo can be broken around that 680 area. And if that does happen, then these bears will have to start covering again. We're looking for points of pain and pleasure. Right now, being that the bears have overall control, every pop, as you see, has only been an opportunity to short the market at a higher low. So if you do take a call, do not marry her. Don't do it. You gotta love her and leave her alone. Don't get yourself hurt out here. It's not a game. Well, that's what I see. If you see something different, please let us know. We'd love to hear from you, your ideas, your thoughts. Sometimes I need to clean my own glasses. This is why I identify my trades. What am I looking at? If you see something, let me know. As the market is continuing in this controlled buying algo, as we see here, lovely. Top left corner is a 2-minute chart. In the middle is the 5-minute chart. Next to that 5-minute chart is the daily chart. And then when we come on down, we got the weekly chart, the bottom right corner. The bottom middle is the 30-minute chart. And the bottom left is the 15-minute chart. Special shout out to those of you who are tuning in for the very first time. We do appreciate you. And those of you who watch the replay, we appreciate you as well. I'm going to start off with this view, as we like to do a top-down analysis. We like to look at the higher time frame for trend and dominance. Who has control of the week? Who has control of the day? Then we like to break it down to look for our entry areas in the 15-minute if you're an ORB trader, the 5-minute, or the 2-minute if you're a little bit more advanced. As long as you are in agreement with the larger time frame. In Coast, he said he has alerts set. Previous day high, pre-market low, and previous week low. FOMC and PPI is on Wednesday. Thank you for that information, teammates. Thank you for that information. Now, for those of you who don't know, with those two reports coming out, FOMC and PPI, the market may very well lull sideways until Wednesday. And see what big money decides to do on Wednesday after FOMC and PPI, and then make a move. But who knows? That's not to say that there won't be any possible lovely trades before then, but whenever there's FOMC coming out, sometimes the majority of big money waits to see what the report is and then reacts. Use that information, do what you will with it. Just wanted to point it out to you. Now, I'm going to go ahead and pop the news up here in the bottom right corner, because as you know, when 47 is in office, you have to watch the news. Oil prices falling back down. Someone's a little bit happy about that, I see. Coming out the gate, you see the contracts are very expensive this morning. Is anyone else noticing that? Very expensive contracts this morning. Oil has fallen back down below $100 a barrel. Oil right now is currently at $95 a barrel. Nice bullish green day would be on par, especially as the market, as we look up here at this daily chart, attempts to go back up now from the lower bottom part of the algo, attempt to go back up towards that 677. The market does have my interest. It doesn't have my money yet, but it does have my interest. Also want to make a note, as we are green for today, currently. I'm also placing an alarm team at 668.5 as we are green for today. If the market does decide to come back down below that 668.5 and we go red for today, this will be a lot of bullish covering. and a potential early entry for a put. If we flip from green to red, that would be a huge wick at the top of the candle. We see that exactly happening right here on the 2-minute chart. Beautiful 3-candle reversal. Beautiful 3-candle reversal. We spoke about that earlier, that this might be the area that I might want to take that put. Once you got up to that 670.8 area, that could be the lower high that we were looking for. She went right up to it and came down. I did not, however, get in a put here. But we did identify this as the potential lower area, as a potential area for a lower high. Came right up to the alarm. Again, everything is, proximity. Nothing is exact. In fact, that was pretty doggone close enough for me. Go by this being Monday, being patient. Beautiful shooting star on the 5-minute chart. However, we want to keep in mind that we are green for the day. The 30-minute chart is green. We have a very strong first opening 15-minute candle is green. And even the second candle is still green. It has not flipped colors yet. So this could very well be a nice pullback to trap eager and anxious bears. Time will tell.
Semis are the leading names on the S&P, but the airlines and travel names like cruise lines are right behind, obviously keying off more on what oil's doing today than the weather disruptions or the DHS disruptions, as a lot of airline executives give Congress, urging Congress to end this partial government shutdown, which has created long lines at various airports around the country. Dow up 500. Stay with us.
Hope everybody had a great weekend. Hope everyone had a great weekend. And if anybody else would like to share their plans, including you guys on Kick, please feel free to put your plans in the chat. We will definitely acknowledge you. I want to thank you guys for being here.
Time for a Monday edition of Stop Trading with Jim.
Uh-oh, here's an RBC note that talks about a super cycle of memory. Every time we see super cycle, I think about the coal super cycle and how you're kind of near the end. But they're talking about 2027. We're going to strengthen the data center. I believe this. Micron stock is on the go. I think you can go much higher.
Yeah, a lot of these memory names, Jim. I think the South Korea ETF, best day this morning since April.
Oh boy, it's about, I don't know, about 60% of their market is made up of SK Hynix and Samsung. Those are the two biggest producers of memory. Micron lags as third, but it's ours.
Meantime, got a lot to work through this week, Jim. We'll get Oklo and Lulu and FedEx and, of course, the Fed.
Well, also we have on our show, I think, some newsmakers. We've got ARM, we've got Synopsys, and we have Dell. And I want to point out that Dell was the only company so far that has been able to navigate this memory supercycle, and it's almost an advantage to them because it is not their first time they've dealt with this. I think Michael Dell will tell the story of today. It will be the biggest gainer other than Dollar Tree is my prediction.
And then when are you back, Jim? You're either today and tomorrow?
Yeah, and then I've got that special Brioni pajama
Brioni
suit, so I
that
go
you
right
used
from
to fly on the red eye back home. Yes, yes.
Boy, I tell
Don't
you,
do the red eye.
It reminds
Don't
me
do
of
the red eye.
When I start saying that stuff, it
Don't
sounds
do
like
the
when
red
David
eye.
told me to shut up about NVIDIA when it was at $2. Remember that, David? Shut
No,
up,
I don't.
Jim. I've heard enough about NVIDIA.
No, I don't.
No,
That's, you're making
play
things
it.
up now.
Todd Bonin, our executive producer, has the tape
$2?
of
What are
it.
you talking about? I never
Could-
said that.
Well, it's split adjusted. Split adjusted when I named my dog NVIDIA. You were against
All
it.
right, fine. Just don't take the red eye,
What
okay,
did
please?
you name your dog? Nebius? Is your dog named Nebius?
No. He'll just have the same name, Scoop.
Jim, look forward to great coverage today. We'll see you tonight, Mad Money, 6 p.m.
Thank you.
Eastern Time, as we are holding this morning's opening highs, 1% gains across the board.
Come to Papi, come to Papi. Now I'm going to be very, very interested in this area. Again, I repeat, this is where I was initially looking for a lower high to short. I'm being completely patient here. If it doesn't happen, I'm perfectly fine, as that moves me towards more aggressively ready to enter this call at the next level of 672. As those are my plans. That's where the easy money is. Remember, 672 will be the close of the cup. So we can expect a little pullback there as the handle forms. What I then want to see is the handle form, which should be a break and a retest, and then continuing on with that strength. Again, this, you see it right here on the 2-minute chart. This is the area I was looking to potentially short a lower high. If it happens, great. If it doesn't, it's fine as well.
Good Monday morning. Welcome to Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber back at Post 9 at the New York Stock Exchange. Coming up this hour, the latest on the Iran war and the impact on oil and the global markets. By the way, session highs right now for the S&P. We're joined by Atlantic Council CEO Fred Kemp, warning about the possibility of a global recession. Plus, NVIDIA kicking off its annual GTC conference today in California. We'll talk about what's expected as chip stocks get a bid in early trading here. And Meta is higher this morning after a report saying major layoffs could be on the way. We'll talk to an analyst about what's behind that move.
Let's get some housing data breaking this morning. Diana Olick's got that for us. Hey, Diana.
Good morning, Carl. Home builder sentiment in March rose 1 point to 38, and February's reading was revised 1 point higher, so it's a slight beat. Now, the street was looking for 37, but anything on the NAHB survey below 50 is considered negative. The index stood at 39 1 year ago. Now, this reading was taken this month as mortgage rates moved higher due to the war in Iran and fears over oil and inflation. Of the index's 3 components, current sales conditions rose 1 point to 42, buyer traffic rose 3 points to 25, and future sales expectations rose 2 points to 49. The NAHB noted many buyers are sitting on the fence waiting for lower mortgage rates, and the builders are still facing elevated land, labor, and construction costs. Nearly 2/3 report they continue to offer sales incentives in a bid to firm up the market. 37% of builders cut prices in March, up slightly from 36% in February. Sarah?
Okay, a little better sentiment, though. Thank you very much, Diana Olick. Guys, it's a big week for data and macro. We've got a big Fed meeting in the middle of the week. The FOMC releases not just a decision on interest rates, but the dots. We get the projections for how many rates they think are going to happen, which is interesting because the market has really changed its view on this, now only expecting maybe 1 cut this year. We'll also get the PPI, wholesale inflation, on Wednesday, and then, of course, jobless claims highly in focus every week on Thursday. Just want to show you what's happened with the 2 key inputs for the Fed since the last meeting, right? They've got a dual mandate, which is to keep inflation steady and to keep jobs, basically unemployment. So let's start with inflation. The PCE is their preferred measure, and we just got the January reading. It's delayed because of quirks with the data, because of the shutdown. So in March, we get the January reading. Where is it? It's 2.8. But what you can see, and we did a short-term chart to show you just in the last year, it's elevated and it's kind of coming in on the hotter side. I mean, the January report was a little bit better than expected on the headline number, but core was firmer. And as you can see, the Fed's probably going to want more proof that the trend is going down or at least stabilizing again, especially ahead of the storm of higher gas prices, which we expect. It's not factored in here, but we are seeing a little bit firmer inflation. Now, here's where it gets a little complicated. And by the way, you can see CPI too. Just, they track PCE, but CPI as well, just to show you. There's the gap in the government shutdown. It's elevated, right? It's better because it's 2.5%, away from the 3%, but it's not 2%. Now, where it gets complicated is on jobs. because the other part of the Fed's mandate is to keep job growth steady. And guess what's happened? Job growth has stalled. We got a negative number on jobs last month, and the unemployment rate, which is the other part of what they target, has risen to 4.4%. Is it a disaster? No. But when it moves up, that's usually when the Fed cuts rates. So they're kind of in this uncomfortable spot, David, where, you know, the jobs numbers would suggest they should be cutting. The inflation numbers suggest maybe they should be holding. And we haven't even seen the impact on gas prices yet.
And we haven't really seen, or we're still trying to understand the impact of AI, which we're going to talk about, as we should, almost every day here, in terms of the productivity increases that it may bring into enterprise, but it may be coupled with, Sarah,
job losses.
Job losses, or certainly lack of hiring, if any hiring. And if you're the Fed, how you think about that is got to be an important component of everything else you're taking in.
Right, because normally what they would do is if you see job losses, they would stimulate the economy. They would cut interest rates to try to make things easier and give businesses more confidence to hire. But if the reason they're not hiring is because they're getting so productive and they're not matching the right skills for people coming out into the labor force to understand AI, that's going to be a tough battle for a Federal Reserve. It's why people say the fiscal authorities, government needs to have more training programs, more of an idea of what to do if we see some sort of mass unemployment.
Do you ever think about it from the, I hate to say this, but sometimes I can't sleep. I think about, what does this all look like? Do we have some sort of jobless boom economy? Yeah. What does that look like?
It's like strong GDP.
But if nobody has a job, not nobody, but you understand, if we have very high unemployment, we're still a consumer-led economy. How does it all work if business to business, though, is great because it's just AI to AI?
Yeah, I know. It's like you could have these really high GDP numbers and productivity numbers at the same time where unemployment spikes, or at least is higher. And for look, it's a K-shaped economy already, where the upper income that's who's spending on the economy. But if the upper income, if the white-collar jobs, that's what's at risk, then there is risk of spending decline, right? That's what drives the ultimate spending in this economy.
The value will only go to the upper.
Yeah, and then you wonder about the politics of it all as well. Alex Karp was talking about that last week on CNBC about how, the Democratic voter base is going to get hit, and it's really the blue-collar workers that are going to be empowered here, the trades. I mean, it's so unclear right now. But if you're the Fed, it's not even conclusive that we're seeing evidence of this playing out in the labor market and why the unemployment rate is rising right now. You could be blaming a number of other factors. Tight jobs market already, immigration policies, which have decreased the amount of workers. I mean, it's hard to draw exactly a line to why we're seeing rising unemployment. Yes, I know we get the Block announcements and the Atlassian announcements, but overall, I mean, we talked to the head of McKinsey, Carl, last week, Eric Kutcher, and he was saying he doesn't buy it. The CEOs that he's talking with and dealing with, they're either hiring more or holding steady.
Yeah, I mean,
on AI.
We talked to Bill McDermott, as we said on Friday, about college grads. I mean, that unemployment rate going to 9 right now is, I don't know. You don't think that has anything to do with technology?
Maybe that does, but that's a subcomponent right now, of the overall unemployment rate. But it matters.
The hiring rate is flat. I mean, new entrants have a problem.
Yeah, I mean, those entry-level jobs. I think that's a question. Bill Gurley's going to join us next hour. I'm really excited for that. Of course, noted venture capitalist, because he has this new book about how to be happy in your job. And I think the question is, how do you do that when AI is changing all jobs? Right, all jobs and all prospects. Yeah. By the way, just national gas price average, $3.68 a gallon, around there. Well, actually, sorry, that's DC.
$3.72.
Yeah, $3.74. It's seen this big jump. I think the question is obviously how long it lasts. That's what the Treasury Secretary told Brian this morning, which is basically, this is sort of a temporary phenomenon, and he expects prices to come down when the war ends.
Yeah, I mean, I don't know. Our Bob today still implies $4 gas in the coming weeks. Joining us this morning to talk more about the market is Michael Kantrowitz, Chief Investment Strategist over at Piper Sandler. Michael, always good to have you. Thanks for the time.
Morning.
I know you've been saying you don't want to get too binary in your positioning and get whipsawed by these oil prices. That seems to be a good call, at least today.
Yeah. I mean, since this conflict started, equities and oil prices on an intraday basis have been trading with about near a negative 90% correlation. So, that means that you're going to see whipsaws in not only the headline indices when oil goes up or down, but also in the leadership of the market. And so instead of trying to make an oil call, or which is essentially today a stock market call as well, and getting overly bearish or trying to necessarily aggressively buy the dip, we've recommended a continuation of what we've been recommending this year, which is a combination of just looking for cheaper companies that have higher profitability and better earnings momentum. And that strategy, and we look at this basket every day, has been performing well actually through this volatility over the last several weeks or couple weeks now.
And what sectors does that lead you to?
Well, it's actually not really it's not really a sector call, because when we're thinking from a somewhat of a quant perspective, we're actually recommending sector neutral, because instead of thinking of sectors in terms of companies, what they do they build widgets or semiconductors or cars, we more think about how well they do it. So in other words, less important about what industry you're in, but more important about how strong your fundamentals are. And coming into this year with the view of a broadening economic backdrop, at the time, though, we had really tight credit spreads. We recommended moving towards cheaper companies and companies with earnings momentum and profitability. So again, and you're seeing that type of mix outperform within most of the 11 GICS sectors. So again, if you're making big sector calls, it could really end up today being a big oil call, and we don't want to do that. So it's another way of being more diversified.
Is there an event risk around the Fed meeting this week? I mean, the assumption is obviously that they don't do anything with rates, but we'll get the projections, you get the communication as always. Now that the market has moved so far away from rate cuts this year, what do you think the risk is?
Well, I don't think Powell's going to come out and say anything that's going to sharply surprise the market on either side of the mandate, because as you were just mentioning, there's been some softness in the job data most recently, but that was following 2 months of pretty good job data. And then, of course, inflation data is going to be impacted higher by oil prices. So I'm guessing he's going to be discussing, again, this tug of war that Powell's been talking about for the last several months between the two sides of the mandate. But generally speaking, looking at the economic data, today we got the Empire Fed data, which was surveyed during, it does capture the beginning of the conflict, and that was another better data point. So we had a lot of economic momentum and stimulus coming into this backdrop. So we expect growth to hold up fairly well, again, assuming that this doesn't last beyond, I would say, 2 months.
You mentioned spreads. What is your take on what spreads have done, and sort of this ongoing evolving conversation about private credit and equity too?
Yeah. From a macro standpoint, credit spreads typically correlate or reflect economic momentum. So the PMI data I mentioned earlier, that was, you look back the last 20, 30 years, when that cyclical data improves, you typically got tighter spreads and vice versa. But since 2022, there has been a paradigm shift, and we would argue really it's the inflationary data, whether it's interest rates or inflation expectations or the price of oil, has really helped explain the risk that's being priced into the market in both equity valuations, which are clearly reflected in also credit spreads. So the widening we've seen from record low levels, I think, is largely a reflection of higher oil prices. And to compound that, it's a little bit adding insult to injury. Interest rates are also highly correlated. The 10-year's been moving up with oil as well. So, again, it's magnifying the whipsaws in the financial markets, because it's not just about oil. It's there's a whole bunch of commodities, but it's also about the 10-year bond yield, which is moving with oil as well.
Right. Although kind of a relief today to see oil below 94 and the 10-year still not cracking 4.25. Michael, talk soon. Appreciate it as always. Good to see you.
Take care, Carl.
Michael Kantrowitz.
Here's our roadmap for you for the rest of the hour. After the break, Atlantic Council CEO Fred Kemp joins us with a warning about the possibility of a global recession tied to the war in Iran.
Plus, NVIDIA is kicking off its GTC conference today. We're going to talk to one analyst about what are the most important announcements that we can expect.
And fresh drama around the Fed and this investigation into Chair Powell, why it could delay the confirmation of the next chair. That story and a lot more when Squawk on the Street continues.
Alrighty, team. Very interesting opening we're having this morning. Market came out very bullish. hit that area again that I told you guys about that potentially could be a lower high. If we're able to get over and above the 676 area, possibly moving towards 671, that bullish strength may continue, which is why I said that I love 672.4 for the easy money. Alarm at 672.1. Observing the market from a safe distance. Hope everyone is being safe this morning. As you heard, FOMC coming out Wednesday. A lot of uncertainty right now. Big candle here at 10:15. Big 10:15 candle here. As we have a doji on the 15-minute chart looking at the higher time frame. A red doji also on the 30-minute chart. How's everybody doing this morning? Big Ben is in the building, kicking it with us.
Welcome
Thank
back
you,
to Squawk
Ben.
on the Street. Treasury Secretary Scott Bessent
Kicking
sat
it
down
with us.
our Brian Sullivan earlier today. They were on the sidelines of China trade talks in Paris. They made some headlines as well about the war in Iran and, of course, the Strait of Hormuz. Brian joins us now. He's got a lot more for us. Brian.
Yeah, easy for you to say, David. I'm the one that's jet lagged. I'm probably going to do that about 10 times. But we had a wide-ranging, about a 15-minute long, just totally off the cuff, unscripted interview with the Treasury Secretary this morning at the OECD headquarters here in Paris, France. And we talked about a lot of things. They were coming off a meeting with the China trade delegation, as you referenced. So, of course, that's kind of how we opened it. And it was interesting because there's some articles out there today that say the President Trump, may delay this expected meeting with Xi Jinping in Beijing that's supposed to happen in April. And the reporting effectively suggests that because of the war and because of some problems with China maybe not helping out with shipping in the Strait of Hormuz, that meeting may be delayed. So I asked the Treasury Secretary about it, and he pretty much went after those reports, and he said they were, for lack of a better term, not true.
And there's a false narrative out there that if the meetings are delayed, it wouldn't be delayed because the president's demanded that China police the Straits of Hormuz. It would be
because there was a report out to that effect this morning.
That's completely false. So if the meeting for some reason is rescheduled, it would be rescheduled because of logistics. The president wants to remain in D.C. to coordinate the war effort.
So basically said those reports are indeed false. I was going to use a word in French that I figured, but then I realized our audience is global and would probably know what I was getting at. Then we, of course, pivoted to the issue of the day. That is the war. That is the price of oil. That is the Strait of Hormuz. That is the shipping blockade. And there's this, listen, everybody's hoping that there is some kind of undoing of the risk of the logjam of the shipping. I don't want to say the strait is closed because plenty of ships have gone through. And in fact, Secretary Bessent talked about that in a way, and he said that Iran, the U.S. is allowing, and I'm trying to be very careful parsing my words here, David and Sarah, the U.S. is allowing Iranian ships to go through the Strait of Hormuz, and that there's also maybe a bigger shortage, daily shortage of oil than some in the market may think. Listen to this.
It looks like the deficit is about 10 or 14, and that's before any of the ships are coming out of the straits. So if you think about the Russian oil, that is somewhere between 9 to 11 days, 12 days of supply without the market moving. There's Iranian oil that's out in the water right now, about 140 million barrels. The Saudis, they have supplies stored around the world that they can release. And then the global SPR release, largest ever, it was 400 million barrels.
So I know you guys, listen, we hit Goldman Sachs, JP Morgan, Morgan Stanley, UBS, everybody else. They've all got their own estimates. There is the estimate that not only does the Treasury Secretary have and use, and they would have pretty good information, guys, but remember, Scott Bessent, former longtime, extremely successful, extremely wealthy hedge fund manager who actually did a lot of work in Riyadh back in his previous life as a fund manager. So the 10 to 14 number, but they think that we can make that up. And again, it all comes down to how long this lasts and how long that deficit goes on.
You talked about hope. I mean, hope is not a strategy. So I'm curious, Brian, given your experience covering this particular sector for as long as you have, what are your expectations based on what you've heard, and what can we expect in terms of the overall price of the commodity over, let's call it, the next month or so?
Yeah, man, that's a tough question, because it all comes down to not only the duration, which I know you guys talk about every day, but also what is the real situation at the Strait of Hormuz? Because I know the word closed has been used. I don't like that word. I'm being a little bit pedantic. I understand that, David, but the reality is that plenty of Iranian oil, most of that bound for China, is going through. And indeed, as I referenced, the Treasury Secretary saying, yeah, we're allowing Iranian vessels to go through to make sure the world is well supplied, of course implying that the United States could do something, wink wink, about these Iranian filled with China oil vessels. It also comes down to how much oil is truly being loaded at the alternate Saudi port of Yanbu on the Red Sea. If you look at marinetraffic.com by Kipler, there's a string of ships waiting to load, 5 to 7 million barrels a day there. We saw oil at, I think, 103, 104 overnight before it came back down to where it is. So I think, David, I'm not giving you a clear answer because I think the estimates are anywhere from 125 back down to 75. I'll let the market speak and say that right now oil is in what's called backwardation, which means current prices are higher than future month prices. So we go down every month. Doesn't mean the market will be right. Market could be wrong, but we go down every couple months. And those numbers for June, I think, Sarah, around $80. If that's the case, we'll be okay.
And actually, I thought that the Treasury Secretary's comments to you at the end of the interview were notable, given his background, trading these kind of things. Is he endorsed that view that the market had, the backwardation, that prices are going to be lower. He used the word weeks and said that he would take the under on $80 a barrel. Right?
Yes. To David's point, yeah, hope is not a strategy, but the market is saying $80 maybe by May, June, if this war, whatever you want to call it, with Iran or the proxies that are firing RPGs, whatever happens. But listen, Sarah, we're $25 a barrel away from one other attack in the Red Sea. And I think that is the biggest risk right now for this market. Everything I read, not my opinion, is if something else were to happen somewhere else, you might see another big bid come into the price of crude.
Okay, Brian. It's great to have you there in Paris for those trade talks and also talking about oil with the Treasury Secretary. For more on the latest developments in Iran, let's bring in Fred Kemp, CEO of the Atlantic Council. Fred, looking at the global picture, I wonder what you make of just where we are when it comes to the Strait of Hormuz. And, there was talk that some of the allies, the U.S. allies would help try to get ships through. Where do you think we are on that?
Well, so first of all, let's be very clear about how the administration feels and then what the race against time is. The administration feels it cannot cut short this military campaign. To cut short the military campaign would lose a historic moment to degrade Iran in all of its military capabilities, and then to encourage Iran in the feeling that it continue to be a spoiler in the region. What weighs against this is the cost of oil, the politics in the United States because of that. And so they're doing everything humanly possible to send a message to the market that everything's going to be okay. And that's where you see the price of oil dropping today. But on the other hand, for the Straits of Hormuz, with every day, I'm hearing this from the market, with every day it's closed, and Brian's right, the word closed isn't right, but you can incentivize people to come through. But if they think the risk is too high, they still won't send their ships through, and that's where we are right now, so they have to lower the risk. The U.S. is out talking to allies to put together a coalition of allies to escort ships through. That is coming together. I think they're relatively positive, but a lot of allies are also turning them down. But let's look at the picture. Every day that the straits are closed or that ships are not going through could add $3 to $5 onto the barrel of oil. If this goes on for 6 weeks, you're up at $150 a barrel, so not the $80 that people were talking about. And if that's the outcome, then the experts I'm talking to say that that would be global recession territory. So there's a lot at stake right here, but it's the economics, and therefore the geoeconomics is more important than the geopolitics right now. But the economics will dictate whether the U.S. can continue its campaign, which it feels it has to continue for at least 3 more weeks.
Right. I mean, right now, actually, Brent is down 2%. It's still above $101 a barrel. But there is some sense that the U.S., Fred, might be successful in getting others to try to get these ships through. You heard from the Treasury Secretary. He said that they're allowing Iranian ships to go through.
Yeah, right. I think they do feel that they can get there. They're also eroding Iran's capability with every day to actually be the disruptor in those straits. So watch that as well. One of the costs to that,
yeah, how do they do that? Can they do that?
By hitting the targets that are sending the missiles. It's harder with the drones. That's really harder, and it's also harder with mines. But a lot of this is not the reality that they're mines or people being hit, but just the fact that the ship owners don't want to take the risk. There's also another side to this, which is by loosening the constraints on Russia, on the sanctions on Russia, letting them sell their oil that's at sea. You're putting money into Russian pockets to escalate their war against Ukraine. So there could be secondary consequences of this, helping Iran on Ukraine. Helping Russia in Ukraine that one also hadn't counted on.
Fred, Brian alluded to sort of a darker scenario in which I guess maybe the Houthis start raising trouble in the Red Sea and disrupting this bypass route, which is obviously helping a lot, the current disruption. How do you gauge that kind of risk?
I think the feeling among our experts is that the Houthis are...
See, team, this is why I told you guys why I like that 672 area and above. Because with this new information coming out, that this FOMC PPI coming out Wednesday, the market right now really doesn't know what to do. We look for easy money. There should be no one trading right now. There should be absolutely no one trading right now. Be patient. The market is bullish today. The first 30 minutes were very bullish. If you came out the gate and scalped, congratulations to you. But if you have not, you can strictly right now see that we are sideways. For the last 30 minutes, look at the 30-minute chart. We have been undecided. There's a doji on the 30-minute chart, which represents indecision. The market has not made a decision yet. Therefore, neither have we.
What do you think happens here, Fred? I mean, can we do that? Can the U.S. be in the regime change business without, I don't know, boots on the ground? It's also not one of the stated goals here.
Yeah, I think the U.S. administration doesn't want to be in the regime change business. They wouldn't mind having not a regime change, but a changed regime. And that would be like Dulce Rodriguez in Venezuela, where you would have a more reasonable leader of Iran willing to do deals and work with us, that sure seems a far way off. So I do think that the U.S. would accept a military outcome that so erodes this regime. And don't forget, it's lost a lot of legitimacy. It might have killed as many as 30,000 of its own people this year. It's lost its capability to hit Israel with any authority. It's naked in terms of its own defense. So everyone seems to be talking about how Iran is, quote unquote, winning this war. But if you're sitting in the Iranian leadership seats right now, I don't think they're thinking that way. There's some last gasp going on here. I'm sort of a glass half full person. I think that in the end we'll have an eroded Iranian regime. The war will end. They will have some spoiler capabilities that are left, but we could move over time to a Middle East that's much more politically integrated, economically integrated, more peaceful. The spoiler for these last 40 years has been Iran, and I just hope that one is not forced to back off this mission before it succeeds, because the costs are just too enormously high, not to mention Iran's part in this axis of aggressors with Russia, China, and North Korea. For Iran to be eroded is in everybody's interest.
All right, Fred, thank you.
Thank
Appreciate it. Appreciate your analysis, as always. Fred Kemp from the Atlantic Council.
Still ahead this morning, big headlines for big tech today as Meta reportedly plans sweeping new layoffs and NVIDIA kicks off its make-or-break developers conference. Got some new developments around the fate of the Fed chair today that could delay a Kevin Warsh confirmation by weeks, maybe even months. And then chip stocks at the top of the S&P trade today. We'll talk about why.
Team, I've entered short. I have entered short. I've taken a short position. I've taken a short position as I spoke about it this morning. Potentially shorting this lower high at this area. I have now entered a short position. Using the break of today new high as my stop out. If we put in a new high, then I will be out. It's just that simple. I'm currently in a short position. Using a new high as a stop out. So I'm going to bring my alarm there. As we talked about it this morning, looking for a potential lower high to short. Going to be very interesting to see what takes place at the bottom of this algo if we do decide to bounce at the bottom of this algo. No problem. But I am currently right now in a short position. Full transparency, I'm in a short position, team. Looking to add a 668.4. That will be going red on the day. 668.4 will be going red on the day. Who remembers when I said if you are in a call, you cannot marry her? Because of the overall bearish downtrend that we are in. Therefore, if we do get the pop up to the 671, it could be our first area to short. If we continue to the 672, look for a handle if the cup is completed. Once we broke over that, then I wanted to get in a call. But I put this blue line here on the chart with the early alarm, looking for a potential lower high. Beautiful indication on the 15-minute chart. We have
Welcome back. We are
a
about 30
beautiful
minutes here into the
3-candle
hour. Here are
reversal.
3 stocks to watch. Micron
Beautiful
at the top
bullish
of the S&P
candle.
500 after
Doji,
announcing
shooting
plans to
star.
launch
Confirmation
a second
underneath
chip-making
that
facility
at the
at a newly
670.
acquired site in Taiwan. Meanwhile,
Coming
Meta
on back
inking a
down,
deal to spend up to
looking to
$27 billion
see
on
if
AI infrastructure with Dutch
we
company
hold
Nebius,
at the bottom of
including a
this
commitment
algo,
from Nebius to provide $12
or
billion
if
in
we
dedicated
break it. Now there
compute
is
power
support here.
and room for Meta to
Right
purchase
now at
more
the
over the next
669.
5 years. In a related story, Meta is
669.3,
reportedly planning
there
to lay
is
off
support
as much
there.
as 20% of its staff to offset
break that
AI
support
spending.
and break
Stocks
the
up almost
algo,
3%. And then keep an eye on Bitcoin popping to
watch
its
out
highest level
now
since
as
early
we start,
February,
as I
now
mentioned
approaching
earlier, start to put
$75,000 a coin.
the
Bitcoin
pre-market
has really
and
moved
opening
with the
bulls
stock
in a
market.
very
I mean,
uncomfortable
big rebound
position.
today, right? It's
Yeah,
been more of a risk
on.
asset than
Lady,
a
I'm
safety
talking.
asset.
Right, risk on, risk off.
Yeah.
Not
Okay. As these bulls from this morning get put in an uncomfortable position, I'm starting to make more moolah. We now have a very big wick on the daily chart. We have a huge wick on the daily chart. Again, my stop is the break of a new high. Of course, there's going to be a little bit of resistance here at this support level of 669.3.
Plus, NVIDIA kicking off its developers conference today. CEO Jensen Huang set to give his keynote address this afternoon. We'll talk to an analyst forecasting big gains for the stock straight ahead.
keeping an eye on shares of many of the alternative asset managers that also have an important component of their business tied to the private credit markets that, of course, we've been talking about for years and even more frequently for the last couple of months. As you know, my reporting and others indicated that there might be liquidity issues that have been borne out, and many of the stocks in question have also declined as a result. Why? Well, the underlying concerns around credit specific to software, and again, we've been talking about it, in software companies whose businesses may be challenged by AI agents and therefore may not be in a position to perhaps pay back their loans in the same way. But those credit issues are far off. Liquidity issues much closer. Also perhaps exacerbating at least that move you're seeing today, a journal article in which John Zito, the co-president of asset management at Apollo, was quoted from a conference.
Very next candle, very important. The last bulls are hanging on at the 6676 area. We put an alarm there at the 6676 area. These are the last bulls that are hanging on. If they do not make it, look for a measure move down to the 6662. I'll move my stop to the 674 area, locking in a winning trade. I cannot lose on this trade. It's only a matter of how much money would I like to receive. Understanding the larger time frame to see where the trade is and where the money is. Remember what I told you. If we go red for the day, all those early morning and pre-market bulls have to run towards the gate. Move my stop from the 671.4 down to the 674, locking in profit. Allowing the market to do what it does. Being very patient, waiting for that clear setup on the 15-minute chart. Beautiful bullish move, doji, shooting star, confirmation underneath the shooting star to 670, straight on down. Right back to this opening position this morning. The bulls either have to average in lower to save this, or they're gonna have to start covering. If they start covering and we get below the 6676, expect a measured move just from their covering to the 6662.
Eastern time. Joining us now, Gil Luria, D.A. Davidson analyst. And Gil, I guess, what are you expecting? Anything new here in terms of any details around some of their plans for chips?
Yeah, there's going to be a lot of new things around redesigns for memory, for co-package optics, robotics, software updates, agentic workflows. But the one thing we're really looking for is a new chip announcement, probably based on the Grok acquisition they made. NVIDIA has really focused on the GPU for several years, and at this event, they may be announcing a chip that's not a GPU, that's more of a custom chip, an inference-focused chip that the purpose of which is back AMD and Broadcom. AMD and Broadcom have had tremendous growth in selling into data centers with their accelerator chips, GPU, custom GPU, ASIC, and NVIDIA is not willing to cede that part of the market. That's why they bought Grok. That's why they're likely to introduce a chip whose purpose is going to be to hold those competitors back.
I love that you keep saying they bought Grok. Obviously, I reported that story, broke that story. They hate it because, of course, it wasn't really an acquisition. They just took all their employees, Gil. Don't you know? They didn't actually buy the company for $20 billion.
At least that's what the lawyers are saying, right?
Exactly.
All right, team. I just took some profit here. I just took some profit here.
They obviously took them. It was Christmas Eve.
Still holding the rest of my position. But wanted to lock in some of this sweet money. I'm sitting here like duck butter.
Jensen Huang is always
I love duck butter.
And he has been for a while, and he saw where things were moving, and he needed to make this happen because he wants to stay ahead of the competition. That doesn't mean the new chip
Great
is
place
out
to
this
take some
year,
money.
But it will be part
Hold
of the
on, buddy. I'm
roadmap.
talking,
We're
buddy.
not just a discussion of.
Great place to take some money. As I said before, the last of the bulls are hanging on at the 6676. I don't know if they're going to come in and put some more money in the market to buy up and save their positions. I don't know. But I do know that at this area, they have a decision to make. I saw us come down to it. We bounced right above my line. Didn't set that alarm off. The next candle was an inverted hammer. I didn't want to take any chances. As I saw it come back down, let me put a little bit money in my pocket to lock some money in. Now, stress-free, sugar-free, googity bob. Remember what I told you guys? The early morning bulls, once we go red, look for a measured move down to the 6662. I've already locked in some profits, so now I can sit back and relax and enjoy that ride down to the 6662. Because of this, I'm going to move my stop down even lower now. Starting at the 671.5. Then I moved it down to the 675. Now I'm moving it down even lower to the 6692. Looking for that measure move to the 6662. As we called out, guys. Look at the Bulls fighting right here again. Fighting for the day. Look at the daily chart. Look at that daily candle. They're fighting for that daily candle. I'm cool with this money. Retest of the 5 minute. Let's be patient here. Retest of that 5 minute chart. 5 minute moving, 5 day moving average. A retest of the 5 day moving average. The 5 is already crossed under the 20.
Software sell off, much more. We'll be right back.
The Bulls did decide to average down and try to save the day. So I'm very glad that I took some profits earlier, locking in some great money.
Welcome back. New drama around the criminal investigation into Fed Chair Jay Powell could end up delaying the confirmation of the next chairman, Kevin Warsh. Steve Leisman joins us now with that story. That has been the risk, Steve.
Yeah, and it looks like it's continuing, Sarah. Janine Pirro, the U.S. Attorney for Washington, vowing to continue the fight against Fed Chair Powell after a judge quashed 2 subpoenas she sought in a criminal probe of whether Powell lied to Congress in testimony about the Fed's building renovations and cost overruns. Her actions create the potential for Fed Chair Powell's term to extend beyond the May 15th expiry. Pirro's announcement came despite findings by a U.S. District Court that, quote, there is abundant evidence that the subpoena's dominant, if not sole purpose, is to harass and pressure Powell either to yield to the president or to resign and make way for a Fed chair who will. Powell, along with several senators who heard the testimony in question, argued that no crime was committed. Pirro was saying she would file a motion to reconsider, and in fact, we just got that motion to reconsider, where the government argues that the court's ruling applied an incorrect legal standard, erred with respect to certain significant facts, and overlooked other relevant facts. Senator Tom Tillis has vowed to hold up President Trump's nominee, Kevin Warsh, as chair while the criminal case is pending. Odds on Kalshi putting the chance that Warsh is approved by May at 66%, so a 34% chance it doesn't happen by then. Most likely outcome will be that the board votes Powell as chair pro tem, which has happened once before with Powell and Greenspan. Senators, they like Warsh, Sarah, but unclear when they get a chance to vote on his nomination.
Yeah, and other big question is whether he sticks around as governor.
That's another big question, and there's some hint about that, whether or not there's a case against him that might matter for Powell.
Yep, absolutely. Thank you very much, Steve Leisman.
When we come back, tech investor Bill Gurley is with us next as Money Movers begins in just a few minutes.
Back to the 6692 area. Retesting that area that was once support. We broke it. Came down to the 668. Bounced right back up there to the 6692. $11 candle, going to be very important here. Need to see a little bit of level 2 action in my life. I need to see who's doing what. Where is the line? Bears getting very aggressive right now. Hold on, man. Somebody out my damn thumb. Thank you. Yes, it's for you. It's for you. How you getting stuff delivered here? When you start getting mail, huh? You online ordering stuff, boy? Huh? What'd you order? Huh? How you know it's for you? Huh? Did you use my credit card to pay for this stuff? Alright now. You have to give me that money back now. Yep, out of that last position. And I'm cool with that. Nice little early morning win before 11 o'clock.
Good Good Monday morning. Welcome to Money Movers. I'm Carl Quintanilla with Sarah Eisen live at Post 9 to the New York Stock Exchange. Today, the oil market reacting to exclusive comments from the Treasury Secretary to CNBC. The latest on the current traffic in the Strait of Hormuz and how it might lead to the potential easing of global energy prices.
Then, with reports Meta could be laying off 20% of its employees, we are joined by legendary Silicon Valley investor Benchmark's Bill Gurley, how he sees AI disrupting the workforce.
And airline CEOs warning of a looming travel crisis as TSA agents now go without pay, asking Congress to restore DHS funding. We'll get the latest details.
First up, though, in the markets, we are seeing a nice recovery here. The S&P up 1.1%. We're off the highs, but it's a pretty broad-based rally. Every sector is positive right now. Tech is leading. That's why the NASDAQ is up more, 1.3% right now. You see big wins from heavyweights like NVIDIA, Micron, continuing its monster run. Meta is up today on some of its news, Tesla, Apple, Intel. But again, it's broad. The cyclicals are involved, treasuries are being bought, and oil prices are down. So a little bit of a reversal of what we had seen with the sort of Iran war trade recently.
Still unable to get past Friday's high. We're going to watch that. Let's begin with exclusive comments, though, by the Treasury Secretary to CNBC, Brian Sullivan in Paris, covering the latest in this U.S.-China trade talk. Hey, Brian.
Hey, Carl and Sarah. Listen, we talked a lot about trade at the top of that interview. The full thing, by the way, is up on CNBC.com. Go check it out. But I want to talk about what you guys just talked about. That is oil, that is the markets, that is Iran, the Strait of Hormuz, whatever it may be, because obviously the market today is thinking that there will be some kind of end to this, maybe sooner than later. On a positive note, there was a non-Iranian vessel that went through the strait today. It was destined for Pakistan. We know that thanks to our friends at marinetraffic.com, because every day, every hour.
Controlled selling algo. I just identified controlled selling algo for the team. Let's see if we break this algo or if we come back down.
lines are late.
Some of your competitors, or I guess colleagues around the street today, are lowering sort of year-end multiples to maybe 21 instead of 22. But their argument is that earnings strength is so robust that you might end up with an unchanged target for year-end. Are you in that boat?
Well, we haven't changed our target. We're 7,700, and we, I believe, are still high in the street with an earnings estimate for the S&P at 320. And what I would say on that is that this has been the positive silver lining here is that underlying fundamentals have held up pretty nicely here. Consensus has moved from a 312 start of the year to 316 now. We think our 320 estimate can end up being conservative, but there's lots of provisos here. It remains very predicated on the AI infrastructure build out and related playbook as pertains to semis, to a certain degree hardware. But again, what we have an eye on here is the lingering impact should oil prices remain higher for longer. At some point, that begins to weigh on our earnings calculus. But at this point, I think we're in pretty good shape.
What about in terms of leadership and sector rotation? Because the other thing that this has brought out is, this big sell-off in software to start the year and then a mini rebound. And then the private credit concerns and the weight that that's had on the financial groups. Do any of those lead you to rethink exposures and recommendations?
Yeah, Sarah. So, I think what we've been suggesting, over the past couple of weeks is that, number one, in our view, the U.S. is a relative safe haven versus rest of the world just because of our energy circumstance here domestically. Number two, within the U.S., we do like tech and the AI infrastructure playbook, really predicated on less traditional economic sensitivity and I think very high conviction and visibility in terms of the earnings profile for this year. So we're kind of leading with this tech call. Now, on the flip side, we've been underweight.
And you like financials, right?
Well, we've liked financials, and this is where you go down this private credit playbook, and they're obviously a little bit more opaque. You can't quite get your head around what some of the implications structurally may be. We think we're in good shape with the banks here, but certainly this is going to be another component of the uncertainty that's going to take a while to play through, I think.
How about the balance of U.S. ex-U.S.? Does it bring more money home?
So, Carl, this is what's been so interesting. So if you look at the flow action over the past month, if not 2 months, very, very clear. Money's been surging out of the U.S. to non-U.S. equities, okay? The international component of ETF flows, for example, on equities has been really, really significant. So too has the flow into fixed income. So what we're getting at here is that all of this was, predicated on the steady state that we knew prior to Iran. So again, this longer duration of the conflict, in our view, sets up for a reversal of some of those flows back our way.
So ultimately, Scott, even if oil prices remain high for a little bit longer than expected, gas prices high, it offsets some of the fiscal stimulus you were talking about. What then are we left with? What kind of economy, what kind of earnings picture?
Well, I think what we're left with, Sarah, is something that is a little bit less visible than we had going in, right? So we're watching the Fed playbook here, and a lot of times the focus is on, well, will the Fed raise or not? Our perspective here is that, since last October, what's been happening is that the degree of ease has been fading, okay? This has been okay because the underlying economic condition has been pretty good. I keep coming back to this duration component. If we can get to where we see an end or a line of sight to the end, and you can begin to expect an oil price trajectory back down and let's say into the 70s, which is what we've modeled for this year, then we're back in all systems go. But if we persist here, 80 above, I think eventually what we begin to see is a bit of a incremental pressure on the consumer that's going to be a little bit harder to navigate if inflation stays a little bit stickier now.
All right. No, that's one reason we're hoping this forward oil curve, Scott, is reading the situation correctly, at least today. We'll talk soon. Scott Cronin over at Citi. Thanks very much.
Legendary Silicon Valley investor Bill Gurley is coming up on the other side of this break. How he sees AI impacting the workforce.
Team, I'm back in
Reports
another
that
short
Meta
position.
could be cutting 20%
Back
of
in
its
another
workers.
short
That's next.
position.
Morgan Stanley Wealth Management's head of U.S. policy out with a new note detailing the potential ripple effect of the war on the midterms. Oil, of course, a key focus there. Money Movers is back in just a minute.
Welcome back. Airline CEOs asking Congress to restore DHS funding as TSA agents now go without pay. Phil LeBeau with the story. Phil.
You know, Sarah, when they missed their first paycheck last week, a lot of people said, well, this is when you start to see the problems potentially start to bounce when it comes to TSA checkpoints and TSA agents who make the decision, look, if I'm not getting paid, I'm not going to come into work. And we have seen those kind of reports around the country. It's not hard if you know people in different cities and you ask when they're flying. More than a few people will say, yeah, we had a long line. Maybe it was 45 minutes, maybe it was an hour. Depends on the airport. There have also been scenes like the ones we're showing you here where there were several hour waits at certain airports over the last week and a half. That's why the airline CEOs, along with Airlines for America, posted this letter to lawmakers in Washington. They posted it in the Washington Post today. We're not going to read all of the letter. Basically, it says, get these guys back to work. get these guys the pay they deserve so they can do their job. Fix DHS funding. Too many travelers are having to wait extraordinarily long and painfully slow lines at checkpoints. Wait times of 2, 3, even 4 hours have been reported. This is not the main thing that is hurting the airlines right now. We all know what that is. As you take a look at the airline stocks today, jet fuel prices have been the biggest issue, though the airline stocks are all getting a bit of a bounce back today as we see jet fuel cool off just a little bit, but still, the cost impact on the first quarter and the second quarter, that is going to be noteworthy. And we'll be talking with airline CEOs and we'll be hearing from them over the next couple of days as they give more specific guidance when it comes to the first quarter and the second quarter, guys. Tomorrow, JP Morgan has its conference in Washington, D.C., and there will be more than a few people listening closely to see what the airline CEOs have to say about jet fuel costs.
Yeah, I was going to say, we're kind of operating in the dark in the way of, we've been watching the fuel surcharges. A lot of them coming from the Asian international carriers, but we do need updates on booking trends, whether that's getting affected, and eventually capacity trends.
Two things are most important here. We know what's happening with jet fuel.
We lost Phil just as the conversation was getting good, but those are going to be two big metrics to watch. The other is that, the street's been trying to suss out which carriers are most exposed to oil and crude and jet fuel. Delta, for example, some argue is one of the least exposed. That's one reason.
All right, I just closed that. It's not working. I'm done. I'm gonna take my win from this morning.
I mean, the costs go up, and this is obviously one of the industries in the crosshairs. Just the Senate is returning this afternoon, but this DHS shutdown.
I'm on the sidelines,
doesn't appear
team.
to
I'm
be
on the
thawing,
sidelines.
the fight here. Pretty bitter battle. Again, the Democrats don't want to do it without changes to immigration enforcement, and the Republicans are saying it's the Democrats' fault for holding the whole thing up. I think Senator Murray's proposal of funding the TSA and other parts of the Department of Homeland Security, maybe except for ICE, I'm not sure how much traction that's getting, but I mean, clearly this is a disaster. I mean, you don't want to have people not getting paid.
No, I know.
We're also dealing with terrorism. We have, and the Department of Homeland Security needs to be funded.
Just came out of it, one version of it in the last few months. Meantime, when we come back, legendary
Big
venture
Ben
capitalist
says
Bill Gurley
burning
on AI's
downwards.
workforce disruption, the impact on Silicon Valley and on the broader economy. That's coming up next.
Then we are live in San Jose today, ahead of NVIDIA's GTC conference. With
I'm on the sideline till this afternoon.
Number investors need to watch out for today. We'll tell you what that is.
A lot of
Don't go
small
anywhere.
body candles, a lot of just indecision, a lot of dojis. I'm on the sidelines. Yes, sir, Ben. I agree with you. That's why I'm on the sideline right now, buddy. Grateful for the little money that I made this morning. I gave some of it back. But that's what happens when you try to make more. Back in this control buying algo. We'll revisit the market if
Welcome
we
back.
get
Let's
back
get
to
a
672.
CNBC News update with Pippa Stevens. Hey, Pippa.
Alarm
Hey,
set.
Carl.
See
The
ya.
White House says President Trump this afternoon will sign an executive order launching a nationwide fraud task force led by Vice President Vance. According to the New York Post, a document describing the order says the task force will investigate the Democratically led states of California, New York, Maine, and Colorado, where the government claims that insufficient safeguards and weak oversight risk large-scale fraud. About 3,800 workers at one of the nation's largest meatpacking plants went on strike today in Colorado. The union alleges unfair labor practices, while owner JBS USA says it's in full compliance with state and federal labor laws. The strike comes amid high beef prices, while the U.S. cattle population is at a 75-year low. And according to written testimony seen by Reuters, the Postmaster General will tell Congress tomorrow that the agency faces a significant financial crisis and without major reforms will be out of cash in less than a year. Among the options for reform, ending 6-day-a-week deliveries, closing post offices, or raising first-class stamps to $1 or more. Sarah, back to you.
Okay, thank you, Pippa. Not the post office's first existential crisis, but acute nonetheless. Benchmark's Bill Gurley is next. His take on the impact of AI and the workforce.
Plus, quick programming note, do not miss SEC Commissioner Hester Pierce live from the Exchange ETF conference in Vegas. It's coming up at 1:30 p.m. Eastern Time on the Exchange. Don't go away.
Welcome back to Money Movers. Meta reportedly the latest company planning to cut headcount as AI-related costs pile up. Layoffs could impact 20% of its workforce, according to Reuters. Our next guest, an early backer of names like Uber, Zillow, Grubhub, has been vocal on AI's impact on employment, and he's out with a new book, Running Down a Dream, How to Thrive in a Career You Actually Love, which explores how workers can, in part, use AI to their advantage, among other advice. Joining us now is renowned venture capitalist, general partner at Benchmark, Bill Gurley. Bill, welcome. It's good to see you.
Thanks for having me on, Sarah. Appreciate it.
I love the book. It's such a practical guide, and I'm sure it will be a very popular gift for college grads, Bill. But one of the questions is, do those college grads face a totally different opportunity set and ability to even get a job in this current environment than a lot of the very successful people that you looked at in the book?
Yeah, I mean, obviously, I started writing this book before the AI movement, and so it wasn't written as a kind of antidote to it. But I do think there are pieces inside of the book that relate to the problem that's happening. And so I think we, unfortunately, channeled a whole bunch of people into jobs that we labeled as safe jobs. And one of the things that you do when you accept that type of educational path is you're admitting that you're not doing something because you care about it that much. You're doing something about it because you think it provides some kind of economic security. And one thing that's happening with AI right now, it's really separating people into two camps. Mark Cuban said this extremely well. He said there are people that where LLMs allow them to learn faster than they ever could before, and there are people that use LLMs to not learn at all. And this notion of agency and whether you're really passionate or fascinated by something, I think really frames a very different light on how you look at AI in your career.
In other words, use AI to empower you and to learn, and all the advice that you advocate in the book: get smarter, become experts, do more work.
There's never been a time in the history of the planet where you can learn as fast as you can learn right now. These tools are amazing. The amount of content that's out there, if you want to get up to speed on something fast, it's the best it's ever been. But you have to be someone who has agency and who believes in AI. I do think the best thing you can possibly do to AI-proof yourself is to become the most AI-enabled version of yourself you can possibly be. If you're a skeptic, if you're a naysayer, that's not a good place right now.
Carl and I were talking to Bill McDermott of ServiceNow at the end of last week about this, about what the transformation of AI is going to mean for jobs, and he actually had a pretty dire prediction when it comes to that college-educated person that goes out into the workforce. Listen to what he said, Bill.
I think it's very natural to be concerned about jobs. I think young people coming out of university today is like 9% unemployment. I think it could easily go into the mid-30s in the next couple of years.
The mid-30s?
I do.
Do you agree with that?
I'm not that big of a doomer. Like I think these waves come and especially with AI, there've been a lot of people pumping kind of miracles into it. It's we're going to cure cancer in 2 years. I don't believe that either. And so they get this kind of apocalyptic view. We've had technology disruption before. I do think any CEO that's going to announce layoffs is obviously going to blame it on AI because they're not going to blame it on themselves or being bloated or anything like that. So we're going to see a ton of these announcements. But it's a normal thing that we've been through before. I think as an individual, you have to say what's in my control and what's out of my control. You're not going to stop AI. We're not going to put it in a box. I can't imagine this policy that our government's going to put out there on retraining that's going to be effective. I don't know who would believe in that. And so the best thing you can do is take agency for yourself and run at this stuff as fast as you can. It's a lot of fun. If you love what you're doing, I meet people every day who love what they do, who are like, I can't believe what I did with AI today. But you have to be in that mindset.
It is interesting, Bill. I had a buddy had to go over a new limited partner agreement, like a 50-page doc. He was going to call his lawyer, but he thought for fun, hey, I'll run it through chat and say, read this and tell me what I should look out for. It caught things that his longtime attorney probably wasn't going to find, and I just wonder, you must be having anecdotes like that yourself.
No doubt. And look, here's one thing. The more you play with AI, the more you realize there are use cases you can try that you didn't try before. So there's an experience curve as well. So the longer you take to start doing it, you're also falling further behind there. So I just, you know, it's really powerful, it's really new, it's really fascinating, but in some ways it's no different than the computer or the tractor for the farmer. You wouldn't go try and compete with a modern day farmer with a plow and a donkey. so like, just get on board. It's time to get on board. This stuff's fascinating.
How about, can we get you on software disruption and whether or not these terminal values are at risk?
Yeah, I mean, look, we had really high multiples for a very, very long time, starting with ZERP. And then SaaS became this category that everyone believed was kind of different than everything else. And so you have, you know, massive multiples. And then you have the whole EBITDA craze, which I've spoken out against, you know, stock-based comp's just too high as a percentage. We shouldn't be using adjusted EBITDA. We should get rid of that. And then the multiples won't look that low. But here's what I would say. One day we're going to have a AI reset because waves create bubbles because interlopers come in. And when that happens, I think you should know the price you want to buy these SaaS stocks in and start gobbling them up. I mean, if you're Buffett likes to say you're a net buyer, this stuff's on sale. That should be positive news. You shouldn't be out on Twitter saying they're mispriced. You should be figuring out how you can back up the truck.
What does an AI reset look like? Exactly. What do you have in mind there?
Well, we've talked about it before, but this wonderful book by Carlotta Perez that says bubbles only exist when the actual wave is real. People try and frame them as being at odds with one another. But when you have a real wave, people get rich quick, which has already happened here. And when people get rich quick, a whole bunch of people come in and want to get rich too. And that's why we end up with bubbles. And so, you know, I don't know what would precipitate it. I mean, we have companies raising 40 billion, 50 billion. That gets hard to continue. If you get accustomed to burn rates that are based on that, one day you run out of capital. The CapEx wave inside of the Mag 7, something as a size we could have never predicted. And one day I just think we trip and run out of money on those things, and we'll see what it looks like. It doesn't mean AI is not real. Like I said, I think it means AI is real, but I do think that moment stands in front of us. Very hard to predict when.
Bill, I keep thinking back to prior tech innovation eras. One of them reminds me of you because when we would do our show from out west, we would talk about Uber, and people would send you copies of the check that they got from selling their car, remember? Because they no longer really needed it because of the advent of the phone and what Travis was doing at Uber. Yeah. How does the AI era feel in relation to that kind of progress?
Well, I have to tell you, when you know, being involved with a company that had a $2 billion annual burn rate felt quite high anxiety, let's just say that. And I looked around at the time to try and find what kind of mentor I could reach out to who had lived through something like that. And I think we were a pioneer for really high burn rates. But guess what? Today's burn rates at these big model companies are many multiples of what we had. So God bless them. It's a scary way to run a company. There's so much venture capital being really forced in on top of the winners these days, and they're forced to play the game on the field and spend at a level that's just nutty. And it's an interesting problem for the public companies because the private companies basically have more capital, more risk capital to play with than the public companies are willing to. And that creates a really odd competitive dynamic.
I mean, you think some of these private companies then, the OpenAIs, Anthropics, are vastly overvalued? Is that what you're saying?
No, I'm not saying they're necessarily vastly overvalued. I just think they're running with really big burn rates, which means their risk profile is super high. The further your expense base gets away from your revenue, the harder it is to actually know whether you understand your unit cost. And it also likely implies you're not focused, right? Because you're doing so many different things. And the competition out there really encourages people to do that and the access to capital. And so, no, I just think it's harder to land the plane. To, you know, Dara did this amazing job of taking a company that was burning $2 billion and got it to over $10 billion in free cash flow. But that's not easy. That's super hard. And we're going to have not one company that's going to have to do that. We're going to have 30 or 40 companies that are going to have to do that. And we'll see how many can navigate it.
Dario Amodei of Anthropic. I'm glad you brought it up, Bill, because I wanted to ask you about him, and because it creates this also sort of broad societal question about who's in charge here and who places the guardrails. The fact that Anthropic is now in this big fight with the entire U.S. federal government and has been blacklisted because it refused to give up its core principles, I guess, is what it would say.
Yeah, I mean, there's another element to that story which I'm fascinated by, which is he is probably the biggest doomer out there. Which is, I can't remember in the history of venture technology where someone who sits atop one of the top companies is the most negative on what's going to happen. Simultaneously, while they're running huge secondary transactions that put billions of dollars in their employees' pocket. It's just a fascinating and odd scenario. I think it's probably an attempt to get regulatory capture. The open models are really powerful and are really popular with the developers. But I can't really explain all that comes out of there because he says things that don't make sense to me as a business person.
What do you think, Bill, is more perilous?
And by the way, all that negativity is now starting to have a negative effect on AI because you've got like 40 data center projects that have local people pushing back on, mostly because of the rhetoric that he's stirred up.
Right. No, well, you're right. There's cities with considering moratoriums, but there's also the hard and fast utility bill that you get in the mail. You're saying,
no
do you think that tie is not exactly one for one?
No. I think that people should push back on that, and I think the data center build-out companies are responding to that and are working for ways that don't impact that. So no, I think that's fine. I think that's fine that that's worked out. I just don't think, if you look at these polls in China, like AI anxiety is at like 20%. In the U.S., it's like 75 or 80. And so the rhetoric's having a huge negative impact on the industry.
Yeah. So Bill, what are you doing now? I mean, I know you weren't involved in the latest fund with Benchmark.
I'm out trying to sell books, Sarah. So.
Beyond that, are you investing? Or, I mean, how are you navigating the AI surge?
I've talked about this a little bit. I'm really excited to launch a policy institute after I get done promoting the book. And so I want to go tilt at some of the bigger problems in the country. I went and talked with John Arnold, who I know you guys have had on. I kind of look at him as a pioneer for what I want to go do. I'm going to do it a little bit different, but I'm impressed with what he's doing and would like to spend the rest of my time worried about those types of problems.
What about elected office, Bill?
I don't see that as a possibility, Carl.
I was going to ask, what about venture capital? Like, how do you evaluate? Here's my final one, and maybe you're not doing it, you're not in the game now, but how are you evaluating who's going to be the winner? Because it sounds like you think a lot of money is just being thrown at the overall trend, and eventually there will be winners and losers, right? Like the internet.
No doubt. I mean, look, this is a very different venture capital world than the one I grew up in, mainly because of the amount of money that people are willing to put high conviction dollars behind. And so, I've never heard of like a $200 million Series B, but those are quite common right now. And so it's, I would call it a sport of kings. People are willing to throw around huge amounts of dollars. They've raised much bigger funds. And I think the risk profile's gone up as a result, which I said earlier. But it's a different game. You're not allowed to be a pragmatic company that grows on your own timeline. You have to play this mega game with mega dollars. And it's a different world.
Well, Bill, as someone who is very happy with their own job, I know you are, I am, we are. So I think that, it's a great book. I highly recommend it. People are always asking for career advice. There's so many little nuggets and gems in here about what to do to find something that you can love. And it's not actually just for college grads. There's a lot of, Bill, there's a lot of sections dedicated to how you can change your career late in life.
No doubt. If anyone feels stuck, they should read the book and see if they can get unstuck. Life's a use it or lose it proposition. It's time to get busy.
Love it. Bill Gurley, Benchmark General Partner, venture capitalist, and author of the new book, Running Down a Dream. Thank you very much.
Thanks for having me on.
When we come back, the impact of higher oil prices on the economy and the upcoming midterms. Morgan Stanley Wealth Management's head of U.S. policy will join us next. Break down what the fallout from the war might be. At home, we'll talk some dollar and deficit, too. Welcome back. We continue to monitor the impact of the Iran war on the economy and on oil prices. What might it mean for the midterm elections this year? Joining us this morning, Morgan Stanley Wealth Management Head of U.S. Policy, Monica Guerra, is with us. Monica, welcome back. Good to have you.
Thanks for having me.
We were just chatting about gas prices in various states. I think in Michigan, you're going to get close to 4 here soon. That's a state that Trump only won by 1% or 2. What do you think the impact's going to be in November?
Yeah, so for us, this is all about duration, for how long it goes, because if we have sustained oil prices, that could impact the relative sense of wealth. And what we've seen is that impacts how many people actually go out to the polls. So if you aren't feeling as wealthy on a relative basis, you're less likely to go out and vote.
So you think it's a turnout story?
It is a turnout story. So for us, it's how long does this go on? is the administration able to navigate and manage that affordability narrative? And if they are not, then it's that wealth effect, right, that impacts the actual voter turnout, which could have a drag for the GOP.
Are you a buyer of these prediction market calls that Dems may take not just the House but the Senate too?
Well, I wouldn't say of the prediction markets themselves. When you look at historical data, you'll see that on average, the sitting president's party loses about 30 seats during the midterms. So this is already in favor of the Democratic seats. That's really, really important because that could influence, future legislative agenda as well as, approvals for ongoing conflict into 2027 and 2028.
The president and the administration has been saying, and they're working to try to keep oil prices from skyrocketing, but they're saying it's a small price to pay. That's how the president frames it when it comes to confronting, the world's major terrorist state here that has been inflicting and spreading terror for decades, including against the U.S. Does that message not resonate with American voters?
I think that there is a little bit of ambiguity from the administration, even in their messaging, right? They don't know how long they're going to be there. The end goal is not clear. And so what we're seeing is that in polling, that there is about 55% that are unsure or not in favor of this conflict. For us, when we're thinking about the longer term implications, what's important from a market's perspective is not just the duration and voter turnout, but how does that impact the federal debt and deficit? And when we're looking at fiscal policy, the longer we stay involved in this conflict, the more likely it could pressure debts and deficits and help push up that bond term premium, right? That's the yield of which you're being paid, right? That interest rate for holding U.S. treasuries. So it helps essentially put that upward pressure on along with inflation. So for us, we're really concerned about U.S. Treasury markets with how long this goes on because of the amount of fiscal spending, right, that goes into this equation.
Right. Kevin Hassett on Sunday said we've already spent probably $11 billion plus. I mean, you're starting to get into numbers that would rival what it would have taken to enhance those health care subsidies. The conversation might also be about opportunity cost and not just the cost itself.
Right. And this is going to be something that is ongoing, and it always comes up around conflict is, we didn't have enough money for X social program, but we have money for this geopolitical effort. And so that is something that does come up in messaging. It's something that you're likely to see the Democrats continue to hit on, especially as we head into full-blown midterms, season, which is going to come July, August. And so this is going to come up over and over again, that trade-off and how the administration manages that. Do we get more on the healthcare front as we get closer to Election Day? More will be revealed, but they have to get a handle on that narrative.
What do you think, what are you telling your clients as head of U.S. policy will happen after the midterms if the Democrats do take the House? What sort of policies might we be looking at or might be blocked?
Great question. So there are areas of bipartisanship. That's something people do forget. We are looking at, a move towards more on crypto and digital assets. You're likely to have more on the front of supporting data centers, an addition policy when we're thinking about energy, not necessarily a transition. So clean energy could also still be on the table, but under the label of alternative energy versus clean energy. So there are lots of areas where we see that there is some consensus. The one thing I want to highlight here is that if you have a GOP-held Senate, which is our base case, and a Democratic-held House, while that gridlock is frustrating for us to watch, right, from the peanut gallery, it's great for markets because it injects a certain amount of certainty into the stock market. Essentially, legislatively, you're going to have a very slow, drawn-out regulatory and legislative process. Things won't move as quickly, and you have markets outperform about 20% over other scenarios.
Yeah, we do like to say the markets do love some gridlock. Monica, appreciate it very much. Good discussion. Monica Guerra over at Morgan Stanley Wealth Management. When we come back, the only number that some are arguing really matters at NVIDIA's GTC today. We're live on the ground in San Jose when Money Movers comes right back.
Welcome back. NVIDIA hosting its GTC conference in San Jose this week. Christina Partsinevelos on the ground with some of the most important announcements we should be watching for. Christina.
Well, Sarah, for years, NVIDIA's pitch was simple. One chip for everything. Training AI models, running them, answering your queries. The GPU does it all. But that pitch is now under pressure. The AI industry has shifted, even just within the last 8 months. Companies aren't just building models anymore. They're running them, generating responses, powering agents that write code and answer questions. That process is called inference, and by 2030, Bank of America estimates it could account for roughly 75% of an over $1 trillion AI market. The problem for NVIDIA, though, is its flagship chips aren't built for it. They consume too much energy and don't carry enough memory to efficiently spit out answers at scale. Google, Amazon, Meta, startups like Cerebras are already all working on alternatives within the inference space. So today, in the arena right behind me that holds over 15,000 people, many of them waiting in line over 2 hours ago, look for CEO Jensen Huang to come out swinging. He's expected to unveil a new inference chip built on technology from Grok. A startup NVIDIA paid $20 billion for Grok's design just within the last few months. That design puts memory directly on the chip, making it dramatically faster and more power efficient for real-time AI tasks in inference. It's NVIDIA's answer to every customer who said its GPUs were overkill. The options market is pricing in roughly a 4% move, which is modest by NVIDIA standards. The real catalyst, though, may not necessarily be the chip announcements. It's about demand visibility, because so many on Wall Street already know about these products or are guessing these products are going to come out. It's been 5 months since NVIDIA told us they had a $500 billion back order at GTC DC. If Jensen Huang updates that number and gives visibility into 2027, that's what moves the stock. The products are definitely the show, but the number is the trade, guys.
Christina, I'm just thinking about other things he might potentially, I guess, talk about. One would be the impact of the war on energy exports and hence semi-fab production. Maybe we try to get something on China and whether or not talks are allowing a path to make that revenue a little more visible.
It seems though most sell-side analysts overall have just written off China, so it's not included in the estimate. So if he does make a comment about China, given the I guess ease now for exporting certain AI chips to China has been lifted, the United States government is more on board with that. That could definitely be a positive for the stock. But I think Jensen Huang's narrative is shifted towards sovereign AI all around the rest of the globe. Last earnings, he said it contributed roughly $30 billion. So I expect him to really focus on other countries as opposed to just China. And in regards to the war, I don't know if he's really going to chime in on, whether helium is going to affect the production of their chips, but you never know.
Yeah, I also, partnerships, right? NVIDIA has made it such a central part of its strategy here to both invest and partner with so many different parts of the AI ecosystem. And I wonder if there's speculation that more is on the way.
Oh, they have a lot of money in their pockets right now to be spending, so I guarantee that there's going to be more partnerships, more supply deals, working with not only competitors, working with recently the $2 billion deal with Light and Lumentum and Coherent. That's within the optical market. So we're expecting to hear news on how they're going to change their networking copper towards optical, so using Light. That is a big partnership and really just shows how NVIDIA is trying to move through the entire stack and use that money. And the other one quick thing, I wonder if they'll mention anything tomorrow about buybacks, because there hasn't been any announcements in the near term. They have a lot of cash, and tomorrow the Q&A with analysts might reveal something.
Yeah, Roth Research says potential collaborations, including Intel. They raised that as a possibility in the morning note. Christina, we'll be watching. Yep, all afternoon. Christina Partsinevelos at the NVIDIA meeting, with the stock market kind of maintaining these solid levels this morning.
Yeah, a little stubborn, trying to hold above 6,700. We'll see what happens. There's some earnings on the way. Of course, the Fed on Wednesday. The great David Faber is in for the judge. Let's get to Post 9.
Welcome to the Halftime Report. I am David Faber in for Scott Wapner. We've got a bounce in stocks. Of course, that's front and center this hour. Oil retreating from $100 a barrel. Our investment committee standing by. We'll debate how they're playing it. Joining me for the hour, Joe Terranova, Jim Lebenthal, and Amy Raskin. Let's give you a quick look at the markets. The S&P off the highs, but still up some almost 1%. You can see the Nasdaq posting a nice gain of 1.25%, led by the likes of Meta, up some over 2%. Some stories out of perhaps some significant layoffs at the company. But, oil overall certainly seems to be driving things. Joe, let me turn to you and just get your read on sort of where we stand in this market, whether you expected we would see this bounce after, of course, that negative action last week.
Well, first of all, it's great to have you here today.
Thank
this is
you.
a unique experience. It's a unique experience, Jimmy. When was the last Monday that the market opened higher? We haven't had a Monday opening higher since the end of January. So everything kind of feels a little bit weird, but it's pretty much the same as you described it, David. It's binary. It's can you secure the Strait of Hormuz? We feel as though there's a little bit more confidence in that regard, whether that's valid or not. The marketplace is suggesting that ultimately is the case. And that's somewhat of a punitive environment for investors. So I still believe this is kind of equivalent to a roller coaster. We're kind of experiencing extreme volatility, and we're starting and ending up back in the same place after we're experiencing that volatility. Not the best environment overall. Not very much you can do about it as well. The conversations I'm having with hedge fund managers and portfolio managers, everyone's struggling right now. The volatility is not delivering the alpha generation that maybe you would believe elevated volatility would from past experiences. So let's hope we can build on what we're experiencing here today. I don't think anyone's suggesting you want to sell and move out of the market. It's really about patience and time being your best ally.
Yeah, I would completely agree. I don't think this is a time, Joe, I think you said it well just then, to sell out of the market. Now, you're speaking to hedge funds and institutional investors. I'm speaking to retail clients, many of whom are probably watching us. And I understand, and Joe understands, and Amy understands that you're nervous. We get that. The flow of headlines right now is very high, and a lot of it is negative. This is the proverbial wall of worry which the stock market climbs. It will climb this wall of worry. It's a question of how long it takes to do so. And answering that question also goes back to what, Joe, you just said, really the price of oil. Now, you and I have said for the last week that the Straits of Hormuz, the reopening of the Straits, is vitally important, and it is. However, I think the fact that we're seeing oil come down a little bit today, while the Straits are still effectively closed, shows that there are some mitigating circumstances here. There is the coordinated release of strategic reserves. There are the two pipelines in the Arabian Peninsula that are taking some pressure off of the flow through the Straits of Hormuz. And then there's just the simple fact that Chinese and Indian tankers are making their way through the Straits of Hormuz with Iranian permission. So it's not as bad as the 20% of oil being off of the market as was initially presumed. That's why oil is down. And this is a major chunk of the wall of worry. If we can get oil to come down, that will allow the stock market to then focus on the other bricks, which we'll get to. Private credit, AI, all those sorts of things.
Yeah, we're going to get to a lot of it.
Trouble spots.
Certainly get to private credit as well, one of my favorite areas. Amy, let me get to you, though, as well, and just get your sense in terms of the action so far this morning.
Yeah, no, I agree with everybody else. The stock market's moving up because people are now more optimistic that we're going to get some sort of opening of traffic through the Strait. I'm not sure if that's right or not. I don't think anybody really is. Again, as Joe said, we're sort of on a roller coaster. If you're looking through this, though, I do think U.S. investors are more sanguine about what's going to happen here and that it's going to be short and we're going to get through this. If you look at other markets outside the U.S., you've definitely seen more of a hit. And so if you do think that this is going to be short-lived and we're going to get through it, that's where I would be focused for opportunities right now.
Yeah, well, energy, of course, is the key. Let's stay there right now. Treasury Secretary Scott Bessent sat down with our Brian Sullivan in Paris. That was earlier this morning. He did make some headlines about the oil market and, of course, the Strait of Hormuz. Brian has more for us and can recap exactly what we know as of this very moment. Brian.
Well, thanks, David. I think it goes right to what you all are talking about, but also to the financial markets in general, because some stuff, rumors, internet chatter, whatever. Okay, let's start with actually just the number of barrels that the market may be short, because everybody you guys talk about, we talked about it earlier, David, has a different number. So one of my first questions to the Treasury Secretary this morning here in Paris, France, following the China trade talks, by the way, was sort of by his estimation, how many barrels of oil per day is the market likely missing, short in the market every day? Here's what he said.
It looks like the deficit is about 10 or 14, and that's before any of the ships are coming out of the straits. So if you think about the Russian oil, that is somewhere between 9 to 11 days, 12 days of supply without the market moving. There's Iranian oil that's out in the water right now, about 140 million barrels. The Saudis, they have supplies stored around the world that they can release. And then the global SPR release, largest ever, it was 400 million barrels.
All right, so 10 to 14 million barrels a day, guys, that's bigger than some numbers that we've seen from some Wall Street analysts. So the question is, oil's down right now, but it's still at 95. It's still $35 a barrel higher than it was 2 weeks ago. So why is oil not at 110 or 125? And you can see there is the aforementioned Hormuz Strait. If we played drinking straight up Hormuz, it might not go so well, guys. So there's been a lot of chatter on the interwebs about, is the Treasury, is Scott Bessent and team, is the White House, is somebody kind of intervening, for lack of a better term, in the market? I know it's just internet chatter, but I had to address it. It goes right to the halftime report. So I asked the Treasury Secretary, are you guys basically in the market of oil futures or other contracts? Here's what he said.
When there's big dynamic price action, that always happens. We haven't done that.
You have? Would you do it?
So I'm not sure under what authority or what auspices we
But
would.
you have not. I want to be clear because you know that's out there.
Yeah.
Don't worry, the Treasuries and the plunge protection team is in focus.
Yeah, people used to say like the Treasury was buying S&Ps. I think that's usually an excuse for people who got too short and got squeezed.
So he said they're not in the market, guys. They're not trading oil futures. They're not trading S&P 500 futures as well. And oil, you can see Brent's about $102 a barrel, but again, not at 122, not at 132 bucks. We'll see what happens. And by the way, we have Dan Yergin on Power Lunch today, so we'll run some of those comments, then get, of course, the great Dan Yergin's take on all of it.
Brian, thank you. Yeah, looking forward to hearing from Yergin as well. Brian Sullivan, though, in Paris. Joe, let me just turn to you on that. I mean, do we move up when oil's down and vice versa? Is that the market we're going to be living with for some time now?
Oh, without question, we're in an environment right now where on a daily basis, if you're trying to put together the puzzle, the first piece of the puzzle is the oil market. And that's an unfortunate environment to be in. Now, to hear that the Treasury secretaries say that they're not participating in the futures market, that gives me comfort. I think that's a good thing. Let the markets play out accordingly. Counting barrels is interesting. You know, maybe over a very short-term period, that has an effect on the market. But I think ultimately, David, this comes down to the ability to restore security in that strait and have the flow of oil return to where it was prior to this conflict. And that's when you'll get the most significant drop in oil. And I don't think anyone has an inclination, without being a military expert, how you get to that end game.
No, right, which is why I would just take risk off. Are we still in that mode then?
I believe that we are. It's very difficult to step towards risk right now and to take a position and say we're going to go overweight in a particular position. If you want to take a position from an underweight back up to market weight, that's responsible. But to say right now you have the degree of confidence where you're going to go overweight a particular asset class or a sector or an individual equity name, I think that's challenging.
Yeah, I just want to point out that with regards to today's move lower in West Texas Intermediate and Brent, that may seem like there's some sort of, hey, maybe the straits are not as bad as we think. I don't think that's what the case is. I think there was a premium built in on Friday. This is a phenomenon that I know we all know. When you're in a news cycle like we're in right now, and there's just a plethora of potential bad news, people happen. So to be at 95 is pricing in a lot of damage in terms of flows coming through the straits.
Amy, I'll turn to you as well. You know, I know you own EOG, Shell, Schlumberger, I think, as well. But anything else you want to think about owning? ExxonMobil's target was raised, no surprise, over at Jefferies this morning as well. You know, does that become attractive here?
Yeah, we came into this overweight energy, and we're still overweight energy. I think where I would add to, or I'm looking to add to, I haven't done it yet, though, is oilfield services. Schlumberger has actually been down because of the war, because they have a big business in the Middle East, and that's sort of on hold right now. But coming out of this, there's going to be a lot of opportunity for oil field services companies, particularly if they have to rebuild the infrastructure in the Middle East. And if the Middle East is totally shut forever, which I don't think is going to be the case, but obviously that's a scenario that people are talking about, we're going to have to explore and drill for oil in a lot of other places. So I think actually coming out of this, the oil field services names are going to be sort of best positioned.
You could also look for alternative sources of oil geographically. Obviously, that takes you to regions like Brazil, Petrobras, maybe Mexico, or turn up north and you could find Canadian Natural Resources or Suncor. All of those names are working particularly well right now. The fertilizer names, they're pulling back. I did on March 2nd buy CF Industries, bought that at around 104. I think it's trading currently around 122. There's a lot of volatility embedded in that name. The fertilizer names are very challenged in this environment because the Iranians are significant exporters of urea, which is incredibly important for corn planting.
Yeah, of course, all the inputs, which we only tend to consider when we suddenly watch the price of oil shooting higher. You do own some Exxon, I think, Jim.
I own
right?
some Exxon, and I think, look, for many years there's been this debate about is energy even relevant? I mean, if we go back to 2023 through 2025, it was really a lackluster sector. I think we would all agree on that. However, I do think you should own energy, David, and I think the easiest place to start is ExxonMobil. Some people want to say Chevron, Texaco, that's fine. I look at them both as the super majors. And here's the thing, these stocks, Exxon in particular, were doing very well before the Iranian crisis developed, because in these companies you get not just the exploration and production, but you get the refining, you get the transportation and distribution. And so to the question of should you be buying these now, I think if you own them, you don't necessarily have to add to them. However, if you have gone through the last few years saying I don't want to own any energy whatsoever, you're realizing that was a mistake. The easiest place to start is to take a toehold position in Exxon, even at this level.
It plugs a small hole, though, in the portfolio. Energy's just not big enough to make you feel good about the moves that you're making as an active hedge against the volatility and the supply challenges and just a market right now that really doesn't look particularly good. And for the better part of 26 probably has not been good because of things like
But when you
AI
say the market doesn't look
credit.
particularly good, I'm curious as to what beyond oil is going through your mind.
I think it's the way in which there's no established trend so far in 2026. It was about S&P equal weight at the beginning of the year. It was about the financial sector. That's where the overweight positioning and the bullish
Financials have
sentiment
gotten crushed lately.
and,
We'll get
and
to
that's
that.
been reversed.
Yep.
So you can't really find any particular area where you have a high degree of confidence. For me, that's not a good environment to be, thinking about putting added risk on.
I think you and I, we will both admit we look at it through a different perspective. I think you would agree you're a little bit more shorter-term trading oriented, tactical, fine, than I am. And what my point is in all of this is if you're a long-term investor, this is exactly the year where you wanted to have a diversified portfolio across many sectors. Thank God I've got ExxonMobil and Cheniere and Transocean. I mean, otherwise, this downturn that we're going through would look a lot more ugly. And the point being, in a diversified portfolio, you never know when that sector, which is, as you've pointed out of favor, suddenly really helps.
And also a really small percentage of the overall S&P in terms of its weighting. I mean, it's not much.
Which perversely means, and Amy may have been alluding to this, that you can go to 6%, be twice the market weight, but still not feel on an absolute level like, hey, you're betting the whole farm on Exxon and Cheniere.
Yeah. To further answer your question, if you think about the places that you were rewarded in the last several years, the places where you find comfort, those places just haven't worked so far year to date. The Mag 7, each of them, they have negative performance year to date. You've had obvious struggles in software names, but even some of these semiconductors and other areas of the market that perform particularly well in 24 and 25, they're just not delivering so far year to date.
If you wanted to be in memory, that would have been a good place to have been. If everybody put that memo out on SanDisk right into 2026. Amy, I don't want to forget about you out there, of course, as well. Yeah. Any thoughts, especially in terms of overweighting energy and whether you want to continue to do that?
Yeah, no, Jim was right. We were about double weight energy coming into this year and through the end of last year. And I think just because we weren't expecting a war in Iran, we just thought that global growth was going to be strong just because of almost all the central banks around the world were easing. There was a lot of fiscal stimulus coming from everywhere. I still think that's going to be the case coming out of this. So I think you can be 6-7%. energy and feel fine about it. I think that's a really good place to be. I know we're going to get to this, but we are very underweight tech, and I think I do think this broadening out trade, this sort of more even trade, both from a geographic and a sector perspective, is going to continue to play out.
All right. Let's get to the White House now. The president had been making remarks involving the Kennedy Center, but as is often the case, he's now moved on to other topics, including, of course, the war in Iran.
Continued in full force over the past few days. They have been literally obliterated. The Air Force is gone. The Navy is gone. Many, many ships have been sunk. They're warfighting ships, but I guess they didn't know how to use them. And anti-aircraft is decimated. Their radar is gone, and their leaders are gone. Other than that, they're doing quite well. They've been a terror for 47 years, and now I guess the world, through the United States, with the help of Israel, is doing what should have been done many years ago. Should have been done many years ago. Since the beginning of the conflict, we've struck more than 7,000 targets across Iran, and these have been mostly commercial and military targets. We've achieved a 90% reduction in their ballistic missile launches and a 95% reduction in drone attacks. The missiles are trickling in now at very low levels because they don't have too many missiles left. We've also attacked the manufacturing plants, the places where they manufacture the missiles and the drones. And that's going on today. We just hit 3 of them today. It's getting very hard for them to manufacture. More than 100 Iranian naval vessels have been sunk or destroyed over the last week and a half. It has to be some kind of a record. Additional strikes continue to launch from all directions every single hour. As you know, we attacked Carg Island and knocked it literally, destroyed everything on the island except for the area where the oil is. I call it the pipes. We left the pipes. We didn't want to do that, but that we will do that. We can do that on 5 minutes notice. It'll be over. But for purposes of someday rebuilding that country, I guess we did the right thing. But it may not stay that way. Just one simple word and the pipes will be gone too, but it'll take a long time to rebuild that. We are aggressively dismantling Iran's defense industrial base, and ability to rebuild its missiles and drone capability is getting down to close to zero. And we're hammering their capacity to threaten commercial shipping in the Strait of Hormuz with more than 30 mine-laying ships destroyed. We hit, to the best of our knowledge, all of their mine-laying ships. Now they can put them on other types of ships, I guess, and drop them in. But we don't know that any have even been dropped in. We're not sure that any have been. That's a big negative for them if they do it. It's a form of suicide. But we don't know that they have dropped any in. But we've hit all 30 of their ships and destroyed them. They're all at the bottom of the sea. We strongly encourage other nations whose economies depend on the Strait far more than ours. You know, we get less than 1% of our oil from the Strait, and some countries get much more. Japan gets 95%. China gets 90%. Many of the Europeans get quite a bit. South Korea gets 35%. So we want them to come and help us with the Strait. We have it in very good shape. The countries, I said, we've already taken care of Iran, but now, because of the fact that literally a single terrorist can put something in the water or shoot something or shoot a missile, a small missile, and it's fairly close range because it is a tight area, and which is one of the reasons they've always used that as a weapon. Iran has always used that as an economic weapon, and it's not going to be able to be used very long. Numerous countries have told me they're on the way, Some are very enthusiastic about it, and some aren't. Some are countries that we've helped for many, many years. We've protected them from horrible outside sources, and they weren't that enthusiastic. And the level of enthusiasm matters to me. We have some countries where we have 45,000 soldiers, great soldiers, protecting them from harm's way. And we have done a great job. And when we want to know, do you have any minesweepers? Well, would rather not get involved, sir. I said, for 40 years we're protecting you, and you don't want to get involved in something that is very minor. Very few shots going to be taken because they don't have many shots left. But they said, we'd rather not get involved. I just want the fake news media and everybody else to remember that was said, because I've been a big critic of all of the protecting of countries, because I know that we'll protect them. And if we ever needed help, they won't be there for us. I've just known that for a long period of time, just like I knew about the Strait, that it would be a weapon, which I predicted a long time ago. Predicted all of this stuff. You guys were very generous in that. I predicted all of it. I predicted Osama bin Laden would knock out the World Trade Center. I made that prediction a year before he did it. I said, you better get him. He's a bad guy. I watched him be interviewed one time, and I said, that's a bad guy. You better get him. 1 year before, exactly. I wrote it in a book. You can even check. About a year before the World Trade Center came down, President Clinton actually had a shot at him, and he didn't take it. Unfortunately, I'm not blaming him for that, but he didn't take it. And he ended up knocking down the World Trade Center, but I predicted that too. I predicted a lot of things. We strongly encourage other nations whose economies depend on the Strait for blood. I mean, these people literally need it. 95% of their energy or their oil comes out of the Strait, and they should be in here very happily helping us. And it's incredible. We have such great, we're number one in oil by double now. We drill, baby, drill. We're double any other nation, and it's going to be soon triple any other nation. And that doesn't include Venezuela, who's been great. By the way, the relationship with Venezuela has been fantastic. Millions, literally millions of barrels of oil are being taken out, and it's been a great help, and it's been to their great benefit. The president has done a really good job. We get along with him really well, but we've taken out millions of barrels of oil and brought to Houston and other places to the refineries. We have refineries set up specifically for that. And it's been a great relationship, and more and more is happening. It's a tremendous oil source, and we're stepping it up very rapidly. The big companies are going in, and they will actually, numbers in a pretty short period of time, numbers that they've never been able to do, we'll be doing. There's a lot of oil under that land. We strongly encourage the other nations to get involved with us, and get involved quickly and with great enthusiasm. I have that from a number of them, and I'd like to say their names, but frankly, I don't know if they would want me to or not, because maybe they don't want to be targeted. But I say, wouldn't matter if you're targeted or not, because this is a paper tiger that we're dealing with now. It wasn't a paper tiger 2 weeks ago. It's a paper tiger now. So now we're going to get down to the reason. We'll take a couple of questions in a moment, but we're going to get down to the reason we're here today. Actually, this was set up a long time ago. It's the Trump Kennedy Center. Over the past year, we've made incredible strides to restore the true purpose and prestige of this revered.
All right, you've been listening to the president talk about the military campaign in Iran, specific to many targets. Let me turn to Eamon Javers, because Eamon, importantly, you listen to him a lot more than we do, perhaps. Anything new there that we may have learned in terms of the duration of the conflict or anything else?
No, David. I mean, the president's reiterating this request that he's made for countries around the world, including China, to provide naval assets to help the United States in the Persian Gulf to clear the Strait of Hormuz. You know, it is just striking to sit here and listen to a president of the United States requesting military aid from the Chinese in the Persian Gulf. One of the objectives of U.S. diplomacy and military activity for decades has been to try to sort of contain China's global ambitions, not to encourage the Chinese Navy to globalize and play a role in all these areas where the U.S. Navy has played a role in the past. Now that script has flipped. Also, the president here is saying that numerous countries have told me they're on the way to help, but not offering any names, saying that if he did offer those names, perhaps those countries would be targeted. So those countries don't want to be named publicly, but he says that they exist, and saying overall here that some countries that the United States has provided support for 45 years or more have told him they don't want to be involved in this military activity, saying they're not going to provide support in terms of minesweepers. And that squares with what we know about the public commitments of countries around the world, really reluctant to get involved in this U.S. military operation, given the scale, stakes, and the strained relations, frankly, between the United States and its allies during the Trump administration, David.
Yeah. Eamon, thank you. Eamon Javers. By the way, just because like to sort of correct things or set the record. We're not double production. We are the biggest producer of oil in the world at about 13.6 million barrels a day, I believe, right now. The Saudis come in around 10 million. So while we are significantly more, we are certainly not double. All right, let's take a look at crude. They're down, coming off the lows, we should point out. We're less than 2 hours away from Jensen Huang's keynote. That's at NVIDIA's GTC event. It will take place in San Jose. Christina Partsenevelos is standing by. She's got a setup for us. Halftime's back in 2 minutes. All right, about an hour and a half from now, Jensen Huang will give the keynote at NVIDIA's GTC event that's taking place in San Jose, California. Christina Partsinevelos is there, and she joins us now with a look at what we can expect. Christina.
Taking place, it's literally taking over the entire city. NVIDIA built its empire on one idea, one chip for everything. You have so many people here lining up just to listen to what he has to say, but the AI industry has moved into a new phase and rivals are circling. Google, Amazon, Meta, and startups like Cerebras are all pushing chips designed specifically for inference. The process of generating responses to your AI questions, it's where the money is going, and it's where NVIDIA's flagship chips have faced the most criticism. Today, Jensen Huang is going to be in the building right behind me, and he's going to respond. He's expected to unveil a new inference chip built on Grok technology, which is memory baked directly onto the chip, designed to generate AI responses faster and at a fraction of the energy cost of today's GPUs. He's also expected to launch NeMo Cloud, which is an open source platform for AI agents already pitched to Salesforce, Cisco, Google, etc. There's also potential tie-up with Intel on custom CPUs for enterprise data centers, and definitely a major push into optical networking, the high-speed connections that link thousands of chips and increasingly determine how fast an AI system can think. The stock, though, if you just look at it on a 5-month or 6-month time frame, it's really only climbed about 5%, and Wall Street is expecting these products. The real question is whether Jensen Huang gives investors something they didn't expect, an update to NVIDIA's 5-month-old $500 billion order backlog, or any new demand visibility into 2027. If he gets that, that will move the stock. David?
Christina, thank you. Christina Partsinevelos. Let's turn to our panel here. Amy, let me start with you. I mean, everybody owns NVIDIA. Meanwhile, it's not that long ago I can remember earnings that were incredible, guidance that was amazing, margins that were astounding. Stock didn't do anything. Does this get things moving?
I don't think so, actually. I think NVIDIA is sort of stuck here for a little while, unfortunately. It's been stuck, and I think you need something really monumental to sort of get us out of above the sort of $200 level. And I'm not sure we get that anytime soon. I mean, he's thrown out this $3 trillion TAM out there, and I think investors just have a hard time if the hyperscalers are going to spend $3 trillion a year on chips, how are they going to make a return on AI? And I think that's a very valid question that we just don't have the answer to. And until that answer becomes clearer, I don't think NVIDIA really sort of takes off from here.
But the spending is not stopping, guys, at all. I mean, this morning we were covering Nebius, Dutch-based company, signs a deal with Meta, another $12 billion. In fact, they're buying the Rubin chip, which is the newer chip. You know, if that's not enough to sort of solidify confidence that for the next number of years, NVIDIA is going to earn more money than we've ever seen a company earn, I'm not sure what is. Meanwhile, the thing trades at what, 20? What is, I don't even know. 21 times.
I think the only Mag 7 that is cheaper is Meta. It's cheaper than all its other peers. It's Apple, it's Microsoft, it's Alphabet. Listen, we live in a world of instant gratification. I don't know if either of you watched the World Baseball Classic last night. Aaron Judge early in the game, met on second and third, he strikes out. Someone sends me a text message. They know I'm a Yankee fan. They said, Aaron Judge isn't going to hit 50 home runs this year. I said, well, if he hits 30, is that a good season? Yes. And I think that's what NVIDIA is, okay? So we went through a period from the end of 22 through 24 where NVIDIA was up 800%, David, right? Mm-hmm. Okay, that's Aaron Judge hitting your 60 home runs. Over the last 6 months, if we could show a chart while I'm speaking about this, everyone's saying that NVIDIA is basically dead money. It's moving sideways, not going anywhere. The S&P over the last 6 months is up, I think, 1%, and NVIDIA is up 5%. That's not so bad. So, look, the reality is you have to adjust your expectations surrounding this stock. It is Jensen Huang. We know he's going to be blue skies today. That's his personality.
Without a doubt.
He should be. He's got the world's most valuable company. They are delivering. And it comes down to, at a certain point, everyone owns NVIDIA. We know that. The analyst community, 93% buy rating. The 12-month price target, 50% higher than today. Okay, I understand that type of expectation. They're lofty expectations. Maybe you need to moderate, but that doesn't mean that the stock is not good and that you shouldn't own it.
Well, Joe, also, I mean, if we're looking at that chart right there, we just had the 6-month chart up, and you were pointing out that it's basically flat. What's not flat during that time frame, as you know, is the multiple, which has gone from the low 30s to now 21, as you pointed out, David. This is a question of whether that multiple is right, or does it need to go lower, or can it go higher, relative in particular to the fact that competition has crept up over the last couple of years. To which I say, okay, competition was inevitably going to creep up. I think the whole AI ecosystem would be a lot worse off if we didn't have Google putting out its TPUs, or Amazon coming up with its chips, or Broadcom, AMD trying to compete. Ultimately, the AI ecosystem, to me, looks very healthy. And I point to things like the current fundraising that's gone on from OpenAI, raising around $100 billion. I mean, that sort of trips off the tongue, $100 billion. Guess what? That's a lot of money. And likely later this summer, you're going to see IPOs, whether it's OpenAI, Anthropic, which is going to get more money from which the funds to buy GPUs from NVIDIA are going to continue. So I put this all together, and I say 21 times forward earnings, very cheap. Like Amy, I don't know what the catalyst is. I do think it's kind of a hop, skip, and a jump to get to 200 from here, but maybe Amy's right. Maybe it's dead water for a little while.
To Joe's point, though, if everybody owns it, then where's the new money coming from?
I don't think everybody owns it. I know. Yeah. I mean, we've got some of our colleagues here on the show who are like, you know, not going to own it. And honestly, think about some of those colleagues. I'm not going to name. I love everybody, frankly, but they tend to be more like me, more value oriented. And if you look at NVIDIA now at 21 times, that's the market multiple.
Right, but you're talking
just 1 second, with growth rate well ahead of the market multiple. This is a PEG ratio of about 1. That's a value stock.
No, they have a different style box, so they're never going to own a name like NVIDIA. But for those,
you could, based on the numbers I just said.
But for those,
you could.
For those that are looking for growth in the marketplace, I mean, come on, where else are you going to find it?
I'm with you.
And if you look at the Mag 7 so far year to date, okay, I understand all the Mag 7 are down year to date. NVIDIA is actually the best performer of the Mag 7.
It is. And Microsoft the worst, down some 17.6%. All right, we won't talk Microsoft right now. Instead, we're going to get a news update. Pippa Stevens has that for us. Pippa.
Hey, David. Susie Wiles, President Trump's chief of staff, has been diagnosed with early-stage breast cancer. According to a post by the president on Truth Social, Wiles has decided to take on the challenge immediately, but will spend virtually full time at the White House. He added that Wiles has an excellent prognosis. Wiles told the New York Times she will remain in her job and is not planning to leave. Iran is negotiating a return of 3 oil tankers India seized in February for safe passage through the Strait of Hormuz, according to Reuters, who cited 3 sources with knowledge of the matter. India seized the tankers back in February, alleging they concealed or altered their identities. And the NBA is set to hold a vote next week over adding expansion teams to Las Vegas and Seattle, ESPN reported, citing sources. The vote will be held at the Board of Governors meeting, and play for the new franchisees would be targeted for the 2028-2029 season. David, back to you.
All right, Pippa, thank you. Coming up, our ETF Edge, Dominic Chu, is live at the ETF Exchange Conference in Las Vegas, and he has more for us. Dom.
All right, so David, many of the best and brightest folks in the world of exchange-traded funds are gathering here in Vegas for this conference. Coming up after the break, we'll talk about some of the investing ideas and themes that are making their way around this conference center. Keep it right here. We'll be back after this break. Welcome back to the Halftime Report. I'm Dominic Chu with your ETF Edge. We are live in Las Vegas for the VettaFi Exchange Conference, where a lot of ETF folks are talking about what's going on in the business. We are joined right now by Sylvia Jablonski over at Defiance ETFs. And Sylvia, thank you very much for being here with us.
Good morning. Thanks for having me.
Let's talk a little bit about what you've seen so far in terms of the types of conversations about the investing environment. What stands out to you?
Yeah, sure. I mean, it's been an exciting year for ETFs, right? We're bumping up on that 14 trillion mark. And when you walk around the room here, so many of the conversations are around thematic ETFs, and specifically and unsurprisingly around everything that has to do with AI. And geopolitically, how AI is now factoring into modern warfare. And beyond that, the AI-powered infrastructure landscape. That's been the hot buzz of the conference.
So in terms of that, how exactly thematically does that play out in terms of investing views? Are there types of funds out there that do it? Are investment advisors, people looking for certain companies in particular that are going to try to capitalize on this kind of AI meets the military, meets geopolitics trade?
Absolutely, and an ETF conference is the right place to be, because whenever you have these nascent industries where you're thinking about, for example, drone companies, a lot of the average investors don't know about the new recent IPOs or the drone companies that are out there, and it's hard to pick the right one. So it goes back to why ETFs in the first place. You have this diversification vehicle. So you're getting products that give you access to the AI names you know. So in the case of modern warfare, like a Jedi, where you have like a Palantir in there, but then you also have, you know, all of the smaller drone companies in there, giving the investors exposure to the whole universe, with a ballast of large cap stocks and the opportunity in the small cap, up and coming modern types of names in the ETF.
And Sylvia, before you go, has it been surprising to you from a market participant's perspective just how resilient the market has been in the face of everything going on?
Yes, you and I were talking about this off camera a little bit. I think it's very, it's very interesting. Here we are in the middle of the heightened volatility geopolitically, but the markets are relatively calm and stable. You know, they're kind of trading within a range. We have some volatility, but we're still just a few percentage points off of all-time highs in major indices. So investors seem to have faith in the long-term resilience of the market.
All right. Sylvia Jablonski over at Defiance ETFs, thank you so much.
Thank you.
David, I'll send things back over to you. We're going to do a lot more kind of talking around here, so we'll have some fun. Back to you.
All right. I look forward to it. Yeah, it looks like you've got a lot of different guests coming up there, Dom, on various funds. Coming up here, though, more pain for private credit. This is retail investors start trying to head for the exits. Can they actually get out? We're going to talk with the committee about how they're playing it next. Welcome back. We're continuing to watch what is going on in private credit. The FT reporting investors, retail investors, pulled more than $10 billion from some of the private credit industry's largest funds. That was in the first quarter. Many of the stocks of the alternative asset managers that make private credit a core strategy are down yet again. Jim, let me turn to you because you have some clients who you've put into a couple of the funds out there. I'm just curious as to how you're thinking about it, what you're telling them, and what you're seeing in terms of their own behavior.
Yeah, so first off, I think overall in the industry, we should expect to see elevated outflows. I mean, that's probably obvious, but the gates are probably going to be in place for the next few quarters. We understand that clients, both of ours and just in general, are worried about the state of affairs, so let's put a little perspective to this. While the fears of a negative credit cycle are being talked about all over the place, in the Journal today, David, I think you and I were talking about this before the show, is pointing out some concerns that maybe Apollo executives have put out there. The facts that we see on the ground say that the credit cycle has not yet turned down. To anybody who's listening to that, they may say, well, what about First Browns? What about Tricolor? What about MFS? Those are cases of fraud, which is different than business deterioration leading to a negative credit cycle. Fraud is a sign of bad underwriting, which is why at Cerity Partners we feel very strongly you have to do due diligence of a level that not every firm can do, and we think we're good at it. Sorry, I'm not trying to be promotional, but there's a lot of due diligence that goes into finding the right managers who do things like make sure you have high percentage of senior loans, that you've got good private equity backing before the private credit loans come into place, that you have experienced, scalable managers doing these sort of things. So the point being is that these are not all alike, but we haven't yet seen the deterioration in the credit fundamentals outside of fraud, which is an indication of bad underwriting.
But you can't necessarily predict what's going to happen in terms of the impact of AI right now for many of these software companies whose business models could be severely impacted. Now, that may not be today or even tomorrow, but it could happen. Yeah. And obviously, that has been the underlying mechanism by which that fear has then led to, well, I'm going to take my money out now. So this is a liquidity problem, not necessarily a credit problem near term. But is liquidity a problem in and of itself, Jim?
Let me start where you started, and it's appropriate to point out that while credit is not a problem now, things can change. They can change at some point. There will be a credit cycle. I don't know when. Now to the point that you're also going at, which is liquidity. This is why gates are in place. This has always been known to be a relatively illiquid sector. And I've seen some people, particularly on social media, saying things like, well, there should be no more investing by these funds until all the redemptions are in place. I find that to be patently false. If there are, just as announcements have come out, 7, 10, 14% redemption requests, we have to bear in mind that far more investors are staying in these funds. And those are the ones to whom the protection is deserved and should be provided in the form of these gates so that fire sales don't go on and generate negative returns going forward.
A lot of private credit funds that I'm talking with that have exposure to the infrastructure, they're out there just illuminating and broadcasting the fact that they are not software driven.
Right.
And if you can isolate the narrative to we are investing in the hard assets and the infrastructure, you have a compelling story to tell. I think for your clients and for the retail community, that's challenging to understand where the ultimate exposure is, because if in fact you are lending to private software, there is literally no transparency on what the real value of those loans are.
That's a feature of the space. You're absolutely right. And again, goes back to why not only liquidity and illiquidity is important, but the education of our clients has been vital. Humbly, I think we've done a very good job of doing that. I'm not sure every client has really received the message, but nobody should be going into this space thinking that this is as liquid as a stock.
All right. Well, speaking of stocks, guys, and unfortunately we're out of time on this, but I would point out Blue Owl has a dividend yield of 10.4%. 10.4%.
We'll leave it there, David. Coming back, some committee moves.
Amy's ready. She's got her latest trades in the defense space. Halftime's coming right back. All right, I want to get to the president, who is answering some questions around the ongoing conflict in Iran.
You know, it takes a little while to get there. It's like, in some cases, you have to travel an ocean. So it doesn't go that fast, but it'll go fast. And we have some that are fairly local that are doing it. But we'll give you a list. Some are very enthusiastic and some are less than enthusiastic. And I assume some will not do it. I think we have one or two that will not do it that we've been protecting for about 40 years at, you know, tens of billions of dollars, Mr. Speaker. So I'll be reporting that to you in the House and the Senate, and I'll say, why are we protecting countries that don't protect us? And I've always felt that was a weakness of NATO. We were going to protect them, but I always said, when in need, they won't protect us. Now, this isn't need. Need would be one of the big boys. But I will say that we built the greatest military in the world, and we protect people. And if we need their mine boats, or if we need anything, any piece of apparatus that they may have because of a situation that they have, they should be jumping to help us, because we've helped them for years stay out of wars. Yeah, please.
Mr. President, can you tell us if you have spoken with French President Macron about the coalition to reopen the Strait of Hormuz? Have you been speaking with the French President?
What does that mean?
Have you been speaking with the French President Macron about the coalition to reopen the Strait of Hormuz?
Yeah, I have spoken to him. He's been, on a scale of 0 to 10, I'd say he's been an 8. Not perfect. But it's France. We don't expect perfect.
Are you confident that France will help with the reopening of Strait of Hormuz?
Yeah, I mean, sure. I think he's going to help. I mean, I'll let you know. I spoke to him yesterday. I don't do a hard sell on them because my attitude is we don't need anybody. We're the strongest nation in the world. We have the strongest military by far in the world. We don't need them. But it's interesting. I'm almost doing it in some cases, not because we need them, but because I want to find out how they react. Because I've been saying for years that if we ever did need them, they won't be there. Not all of them, but they won't be there. I was very surprised with the United Kingdom, because the United Kingdom, 2 weeks ago, I said, why don't you send some ships over? And he really didn't want to do it. I said, you don't want to do it. We've been with you. You're our oldest ally. And we spend a lot of money on, you know, NATO and all of these things to protect you. I mean, we're protecting them. We're working with them on Ukraine. Ukraine's thousands of miles away, separated by a vast ocean. We don't have to do that, but we did it. Well, Biden did it. I mean, I have to be honest with you. Biden got taken to the cleaners. But we worked with them in Ukraine. We don't need to work with them in Ukraine. And then they tell us that we have a mine ship around, and they don't want to do it. I think it's terrible. No, I was very surprised. I told him, you know, we requested 2 aircraft carriers, which they had, and he didn't really want to do it. And then right after the war essentially ended, you know, meaning they were obliterated, he said, I would like to send the aircraft carriers. I said, I don't need them after the war is ended and won. I need it before the war. So I was very upset not upset, I was not happy with the UK. I think they'll be involved, yeah, maybe. But they should be involved enthusiastically. We've been protecting these countries for years with NATO, because NATO is us. You can ask Putin. Putin fears us. He has no fear of Europe whatsoever. He fears the United States of America and the military that was built by me in the first term. Yeah.
You mentioned the significant amount of oil that China derives from the Middle East. What is the status of your conversation with President Xi in terms of getting China to cooperate, in terms of making the Strait of Hormuz safe for those oil tankers?
Yeah, so China is a great example. They get 91% of their oil from the Hormuz Straits, which we protected for years. And it always bothered me that we have these countries. Japan gets 95% of its from the Straits, the Hormuz Straits. And it always bothered me that we're protecting and we don't need them. We didn't need them before we started Dig We Must. Dig Me Must That's the Trump policy of lots of oil. And use them very much. It used to be at 10%. Now it's at almost zero. We don't need, we don't need oil. We have all the oil we need for ourselves. It's one of the great assets that we have. We have more than double what anybody else in terms of oil production. We're at more than double any other country. So we don't need it, but we did it. It's almost, you could say we did it out of habit, which is not a good thing to do. But we did it because we have some good allies there. We have some great Middle Eastern countries there, Israel there. So we did it for a lot of reasons. But it always amazed me that we did it. We never asked for reimbursement. And it was really there to serve other countries, not us. And by the way, we have the Sugar King. The same story. Look at that. Alfie van Hoel. Alfie, thank you both very much. That's Pepe here. Pepe. Hi, Pepe. How are you? How are you? Is Alfie in the backstage? Huh? Is he sitting back there waiting for you? No? You doing all right? Pepe is a great friend of all of ours, I think, in the room. Tremendous. And we appreciate you being here. Great to have you. Thank you.
Mr. President, honored.
That's great. Both of you. Thank you very much. So go ahead, please.
Mr. President, you've said that Iran does want to make a deal. Now, into the third week of this bombing campaign, what would that deal look like? What are the ask that you're making of the government?
They want to make a deal. They're talking to our people. I don't know if they say that to you. Maybe they do, maybe they don't. Don't forget, they are a country that for years, I didn't know this until recently, they're a country based on disinformation. And now they're using disinformation plus AI. And that's a terrible situation. That's a terrible situation. They showed all sorts of things happening in the last 2 weeks that never happened. Between their kamikaze boats that don't exist, between blowing up the aircraft carrier, one of the great ships in the world, the Abraham Lincoln, on fire. They showed it on fire. I called the general. I said, General, what's with the Abraham Lincoln? It looks like it's burning down. No, it's not burning down. Not a bullet was ever fired at it, sir. They know better. They said, this is my first glimpse of AI and what they've done with it. They showed buildings in Tel Aviv burning to the ground, high-rises burning. They showed buildings in Qatar. They showed buildings in Saudi Arabia burning, and they weren't burning. They weren't hit. It was all AI-based. Terrible. It's terrible. And that's their only, I think that's the only thing they do well. They're negotiating, and we always talk. When, somebody said, well, would you talk? Why would you even talk to them? I talk to everybody because sometimes good things come out of it. But I don't know if they're ready yet. They're taking a pounding. I don't know if they're ready yet. And we don't even know their leaders. Look, all of their leaders are dead, as far as we know. But they're all dead. We don't know who we're dealing with. We knocked out the first group. Then the second group met, 88 met to pick the leader because the first group was all dead. And the second group got knocked out. They're all dead. Then the third group met. I would think they're a little nervous about meeting. I don't know if they're nervous. Maybe they're not. Maybe they're crazy. If they're not nervous, then they're crazy. But we met with the next group, but we don't know who their leader is. We have people wanting to negotiate. We have no idea who they are. Yeah, please, Peter.
Thanks, President Trump. What are your advisors telling you about the Ayatollah's son, the new supreme leader? What are they telling you about
Well, it's
him?
not only them, it's you people. I mean, a lot of people are saying that he's badly disfigured. They're saying that he lost his leg, one leg, and he's, been hurt very badly. Other people are saying he's dead. Nobody's saying he's 100% healthy. And he hasn't spoken because the Ayatollah would sit and he'd spew hate from a form of a throne. Not as nice as a throne. I like the English throne much better. But It was a fancy chair, but he'd spew hate from his chair. But you'd see him a lot, right? This one we haven't seen at all. So that could be for a lot of different reasons. We don't know, Peter, if he's dead or not.
Now that you've announced...
I will say this, nobody's seen him, which is unusual.
Something else. Now that you've announced that the U.S. has destroyed all of Iran's mine-laying ships, why can't the U.S. just immediately reopen the Strait of Hormuz?
Well, we could, but it takes two to tango. We have to get people to take their billion-dollar ship and drive it up. If when Pepe has his big sugar ships coming around and they cost $1 billion, and we say, I think it's okay now, Pepe, take your ship, drive it through the Strait of Hormuz. He may say, let me wait a little while, because it takes ship owners, and these ships are very expensive. They can cost up to $2 billion. So they don't want to take a chance that, gee, I think you'll be okay. They got to know it. So they don't have to set, we don't know if they even set any mines. But the thought that they may have is enough to keep people from saying, we don't need it. Now, we are pounding that area, that coast, as you know, left side. We're pounding it, like really pounding it hard. And again, they may have no mine set. We hit every one of their mine drop. They call it the mine layers, right? The ships. They're pretty sophisticated ships. Every one of them is gone. But it only takes one. So it's a little unfair. You win a war, but they have no right to be doing what they're doing. But we're hitting them very hard. And today is a big day where we're pounding a certain area that has very much to do with the Strait. And I think we'll get it going very soon. In addition, we do have other nations coming in. You need people to watch and people to see. We have other nations coming in. Yes, please.
If the United States is working to secure the Strait of Hormuz for the benefit of other countries like China, and our allies aren't yet stepping up to your standard, is the United States getting back to being the world's policeman?
Look, the United States should not be very much involved. They can on a certain basis. They've been doing it for a long time. But I've always said, if you look back years ago, I said, why aren't we being reimbursed? These are the richest countries in the world. Why aren't we being reimbursed for maintaining the Hormuz Strait? And why aren't we being reimbursed for that? I've said that for years. You can go back. They reported on it yesterday. I've been saying a lot of things about the Straits. Number one, I said it's the one advantage they have, but that's a suicidal advantage because they kill themselves more than they kill the rest of the world. And there are things you can do with time. There are other things you can do. But I think we're going to have the situation straighten out pretty quickly. And I think we're going to have some good help. And I think we're going to be disappointed in some nations, too. And I'll let you know who those nations are.
One of your advisors, David Sachs, said the other week that the U.S. should, quote, declare victory and get out of the Iran war. He also warned that if the conflict escalates, Israel may contemplate the use of a nuclear weapon. Has he shared that assessment with you?
No, he hasn't. Israel wouldn't do that. Israel would never do that. And, there's a theory. You've pounded them to hell, and you can just leave now, and it'll take 10 years for them to build back not nearly what they have right now. And I guess that's another theory. But we want to have it ended so that another president doesn't have... Look, for 47 years, no president was willing to do what I'm doing, and they should have done it a long time ago. It would have been a lot easier. There's no president that wanted to do it, and yet every president knew. I've spoken to a certain president, who I like, actually, a past president, former president. He said, I wish I did it. I wish I did, but they didn't do it. I'm doing it, yeah.
Which president?
I can't tell you that. I don't want to embarrass him. It would be very bad for his career, even though he's got no career left. Go ahead, please.
You mentioned...
How about the man right
Thank you, sir. Mr. President, you mentioned that you're not entirely sure who you're dealing with, who the leadership is in Iran. Do you see a viable opposition movement still in that country following all of the protests that we had seen before the airstrikes and kind of an opposition movement that could become a viable leader in Iran?
Well, the biggest problem, and you know, we have brave people in this room, but the biggest problem that I see is that, you know, they put out a warning, and we have the warning. We get everything they get. And it said any protester that goes onto the street will be immediately shot and killed. This is a little tougher than the American way. This is not quite as tough as, nobody can believe it. So I can't imagine, they don't have guns. And the other ones have guns. Highly sophisticated machine guns and AK-47s and other kinds of guns. And they did that with the women. So the women had 250,000, even 500 people protesting a year ago. And they shot women right through the middle of the forehead with snipers. And they didn't have to do many. About 10 went down, bleeding profusely. And 250 to 500,000 women went running in the other direction. Because they can be brave, but they're not stupid. And they have no gun, and you have snipers in buildings specifically for this reason. So a woman goes down falling, bleeding from the head, and it doesn't take long for that to spread. And when that spreads, that crowd dispenses. And nobody else has been able to do that to the extent that these people are violent. They killed a minimum 2 weeks ago, 32,000 people. So, and they put out actually a notice 2 days ago, if you protest, you will be shot and killed. So, I don't know. I would say Mike Johnson's the only person I know who has the courage to go out in that kind of an atmosphere. I don't think so. Yeah.
Have your advisors told you anything in terms of how long we can expect gas prices as high as they are right now?
I don't need advisors to tell me that. I know what it is. You know, the Prime Minister of UK, United Kingdom, yesterday told me, I'm meeting with my team to make a determination. I said, you don't need to meet it with the team. You're the Prime Minister. You can make your own. Why do you have to meet with your team to find out whether or not you're going to send some minesweepers to us or to send some boats? I said, you don't have to meet with your team. It's the same thing here. I can tell you that when this is over, oil prices are going to go down very, very rapidly. So is inflation, so is everything else. But frankly, much more important than short-term, even long-term oil prices, you can't let the most violent, vicious country in the last 50 years have a nuclear weapon. Because the Middle East will be gone, Israel will go first, without question, and they'll certainly take a shot at us before we get our act together and say we got to take them out. You can't let Iran, who's truly a nation of great terror and power. Look what happened in the last 2 weeks. They weren't supposed to go after all these other countries in the Middle East. Those missiles were set to go after them. So they hit Qatar, Saudi Arabia, UAE, Bahrain, Kuwait. Nobody expected that. We were shocked. And the other one, you know, they fought back. They could have yielded. But think of it, if we weren't around, they had tremendous power. They had thousands of missiles, most of which we've terminated. They had thousands of drones. They were making drones and missiles all over the place. We've knocked out most of those factories. I mean, now they're sending out 2 or 3 missiles. Now, you know, they've still got some. They might have 8% left. But mostly they've been eliminated. They've been terminated by what we did and what Israel did, too. Yeah, please.
Israel is expected to expand its ground offensive in southern Lebanon to go after Hezbollah. Have you discussed that with Israeli leaders?
Yeah.
And does the United States support a potential Israeli invasion of Lebanon?
Yeah, no, I did. And I know, look, Hezbollah is a problem. It's been a problem for a long time, not just now. And it's a certain area, because I was with the other night a person whose parents live in Lebanon. This is a very substantial person, wealthy person, whose parents live in Lebanon. I said, really? How do you live in Lebanon? Your parents are living. Oh, yeah, they live there. And over the years, they've gotten used to the fact that it's being bombed. But they explained to me that it's really a different section of Lebanon. It's the section where Hezbollah is. And they get used to it, I guess. I don't know. I mean, people live in Ukraine. You would think they wouldn't live in Ukraine, but they live in Ukraine. I don't know that I'd do that, but they live in Ukraine. They live in Lebanon. Hezbollah is a big problem, and they're rapidly being eliminated. Thank you very much, everybody. I appreciate it.
That was President Trump speaking at the White House just before luncheon with the Trump Kennedy Center board. Welcome to the exchange, by the way. I'm Kelly Evans. The president making a lot of news in the last 15 minutes or so, and markets have been a little bit choppy, but roughly hanging in where they were before we heard from him, with a range of remarks from Iran wants to make a deal and are talking to our people. That was at 1:01 p.m. Eastern, to again saying just a few moments ago, you can't let them have a nuclear weapon. Let's bring in Eamon Javers for some more reaction here. Eamon, price of WTI crude oil and now below 95 a barrel.
Yeah, that's an interesting move, Kelly. And you heard the president there sort of making 2 points simultaneously, right? He said, my attitude is we don't need anybody. We're the strongest nation in the world in terms of whether or not the United States needs military support to open up the Persian Gulf. At the same time, he says he's very disappointed. He's not happy with the UK for not sending military support to the Persian Gulf. He says he's frustrated with China, which gets 91% of its oil from the Strait of Hormuz. He'd like to see China take military action in the Persian Gulf alongside the United States, presumably there. So the president arguing both that the United States doesn't need help and that the United States is disappointed in those countries that have not responded to his requests for help. The president suggesting that his request for help is not a matter of the U.S. needing the help, but that he's testing his allies and trying to see who it is who will come to the U.S.'s aid, because the president has a longstanding theory that NATO would not actually come to the U.S.'s aid in case of an emergency. We also saw the president suggesting that gas prices will go down significantly when this is all over, and suggesting that the Iranian strategy of hitting other Gulf nations came as a surprise to the United States. That could not have been predicted, and that people were shocked by that, Kelly.
Yeah, he said nobody expected that, that they fought back. He said they could have yielded, and you wonder, I mean, again, Eamon, I don't know what the reporting is on this, but did the administration expect that they were actually going to yield to this initial onslaught?
I mean, it sounds from what the president was saying there that they did expect that. I mean, and there was a devastating early strike in the very first day here, where a great majority of the Iranian leadership was eliminated by Israeli and U.S. strikes. So you heard the president on the first day calling for the Iranian people to rise up and take their government back. So there was some expectation early on that this would be sort of a Venezuela, where somebody 2 or 3 rungs down in the leadership would take the mantle, effectively surrender, and offer terms to the president. He didn't get that, and now he says it's not clear to him who he's dealing with in Iran, that is, who the actual leaders are who are calling the shots for him to negotiate with. He said he's not sure that the Iranians are now ready to make a deal of any kind. So this will continue, it sounds like, from what you heard the president say.
All right. Eamon, appreciate it very much. Eamon Javers reporting there from Washington. Let's turn to Scott Wren now for some interpretations for the broader markets on a day where the price action may surprise you, given that the news flow has remained kind of a churn. He's senior global market strategist at Wells Fargo Investment Institute. Scott, it's good to have you, and you're probably listening in a little bit there. I don't know if anything there jumped out to you, or to go back to this morning when the Treasury Secretary seemed to have moved the oil price down with his comments that he thought, look, we were letting Iranian ships through, and to some extent the situation was manageable. So welcome.
Yeah, Kelly, I tell you, I'll say one thing about President Trump. He's not afraid to take questions at press conferences, and he says things that, move markets. And so you have to be ready for that. And, for us, from a strategy standpoint, I mean, we can do all the statistical work that we want. We can do all the modeling that we want. But the bottom line is to think about this, you have to make some educated assumptions. And our assumption is that the Strait of Hormuz is not going to be closed for very long. Now, is it going to open tomorrow? Probably not. Next week? maybe not, but I think soon thereafter, and that the flow of oil is going to come back, which isn't going to happen overnight either, but it take a little bit of time, and that oil prices are going to go down. I mean, we've got a $60 to $70 price target for WTI at the end of the year, and I mean, I think that's very doable if the strait is open. No, there's plenty of oil out there in the world, especially given the very moderate rate of global growth. So, you know, we're making these assumptions. We're positioned for a better U.S. economy this year. You know, we want to be cyclical. We're not defensive. We don't think you should get defensive, but certainly you have to make some assumptions on the outcome of what's going to happen with the strait.
Yeah, the NASDAQ 100 is down for 8 of the past 9 weeks now. What does that tell you?
Well, I tell you, you know, the high flyers, obviously, over the last couple of years are in the NASDAQ 100. They're very concentrated in the tech and communications services sector. So, you know, we're even weight on both of those after being overweight. But, you know, you look at it and, you know, 45% of the market cap of the S&P is made up of those two sectors. I mean, you're carrying a pretty good load of technology exposures. You know, we like the AI play. We think it's a secular move. You know, we're really looking at it from a utilities and industrial standpoint. You know, somebody's got to build the data center, somebody's going to upgrade the electrical grid. So, you know, we like those two sectors, and really financials, and clearly they've performed very poorly here recently. But I think this is a really good buying spot for financials. You know, private credit, is that going to remain to be, you know, is there going to be a lot of debates about that? Yes. Probably the curve flattening, the yield curve flattening, that probably hasn't helped either. But if we're going to have a better economy, more M&A, more IPOs, more loan demand, financials are a good place to look. And you know, right now, they've been beaten up. And so that's a good opportunity there.
I like how you're sort of sticking with some of the winners here. Like you mentioned utilities, though that and energy were the only winners last week. Materials have done nicely. So it sounds like you're sympathetic with the whole revenge of the old economy trade while looking at the financials, which is one area.
A little bit.
Yeah.
You know, and saying that, what we're doing, what we're encouraging our clients to do is, you know, if you are anywhere near even weight on the energy sector, you're overweight now. We want our clients to trim back on that. And then if you're looking at the commodities end of things, energy-related commodities, we want to trim back on that. And we're interested in precious metals. We're interested in industrial metals. So really, we're trying to take this energy outperformance, trim that back and put it in some other sectors that we think are going to work, or segments of sectors that we think are going to work. Because as I said, our assumption is that the Strait of Hormuz is not going to be closed for an extended period of time.
And as you say, sometimes you have to make those assumptions in order to move.
There's no way to avoid it right now.
Exactly. Yeah. Scott, thanks very much today. Appreciate it.
All right,
Scott
thanks,
Wen
Kelly.
with Wells Fargo Investment Institute. Exchange 2026, nothing to do with this program. Great name, though. It's the largest gathering of ETF professionals, and it's happening right now in Las Vegas, as one of the key topics being discussed is regulation around new and existing exchange-traded products, especially levered ones, and those exposed to crypto. Dom Chu is out at the conference, and Hester Pierce is with him now. She's commissioner at the SEC. Dom, welcome.
Thank you so much, Kelly, and thank you, SEC Commissioner Hester Peirce, for taking the time to join with us right now on the exchange. Kelly mentioned it. The SEC in this iteration is very focused on some of the emerging products that are out there, not just in the markets overall, but how they're being wrapped, so to speak, into exchange-traded products. I wonder if you might be able to tell us a little bit about why you're here at the conference and just how you feel about some of these newer type products being made accessible more so to the investing public.
Well, I'm here because this is such an important segment of what we regulate. And so I'm interested in hearing from people about what they're seeing and what the new trends are. And also, I just want to come as a regulator to say we want to work with people on new products. And we think it's a wrapper that can be useful And we want to do it in a way that respects investor protection and also the statute, but we're willing to work with people.
One of the things that has been brought to light more recently within the SEC's purview is the use of levered funds. And we know that the SEC itself has made some decisions very recently with regard to maybe throttling back some of the developments around funds that use even more leverage than, say, existing products that have triple leverage associated with them. Can you take us a little bit through the thought process within the regulatory framework about just why some of these more levered products are being treated with more scrutiny these days, especially when it comes to using more leverage?
As an initial matter, we are not a merit regulator, and so I think that's really important to establish. The existing rules do have some limits on leverage in them, and so people can come in with products that are higher than 200%, but they need to be able to explain how it's consistent with the statute. And again, it's not our job to say which products are good or bad. It is our job to work with sponsors to make sure that they're disclosing what those products are, what the risks are, what they're intended to be used for.
Now, also with regard to cryptocurrencies and tokenization more broadly, we know that the SEC is working a lot more with the idea of a broadening out of products tied to tokenization of financial instruments. Would you be able to shed some light on how you view tokenization vis-a-vis some of these exchange-traded products and what can be wrapped in them, as well as the SEC has made a decision recently with regard to the Wisdom Tree Digital Treasury Money Market Fund and being able to provide intraday liquidity for a mutual fund product. Those all seem like they're at the forefront on a more expansive campaign to tokenize financial products. Is that correct?
Well, again, it's not the SEC's job to decide how the market moves forward, but tokenization is one of those areas that since the administration changed and since the attitude toward crypto and blockchain changed, people have come to us and they've said, we really think tokenization has potential here. Now, of course, tokenization of money market funds is something that had been worked on for a long time, but as you say, there's some new developments there, and more generally, I think people are looking at where it would be most useful. Putting things on chain could be quite useful in many aspects.
Now, there's also a feeling right now that the SEC, in its current form, is trying to be a bit more proactive with regard to working with the business community on having a more engaging relationship on trying to develop these products. Is that a fair assessment of what the current SEC's view is? And how exactly would then you carry that message forward? What would you be saying to some of the broad sponsors of these ETF products, other fund managers who are trying to now work more closely with the SEC?
It really is come in and talk to us about what you're trying to do. We want to work with you toward being able to experiment to see whether the market wants your products. We will have to figure out some difficult legal and technical and operational issues, but we want to walk side by side with you as we think through those questions.
SEC Commissioner Hester Peirce, thank you so much for taking the time to sit with us. And by the way, Kelly, we're going to have a lot more. We're taping a podcast with her for ETF Edge later on today, so we'll bring you some more of those stories. When we have that content from Commissioner Peirce, I'll send things back over to you.
More public companies, Dom, less private, especially with everything going on in private markets, right? It's nice. I know it's annoying. Maybe they can tweak with the disclosure and all that like they have planned. But anyway, it'd be nice, I think. Dom, thanks very much. Appreciate all your reporting today. Dom Chu from the Exchange 2026 conference. Coming up, NVIDIA CEO Jensen Huang. His keynote is set to begin at the top of next hour. We'll look at what to expect from the company's flagship developers event. The shares are up 2.5% into that. We'll be right back with more after this. Welcome back. Shares of NVIDIA are on the rise, up 2.5% today as the developer conference is about to kick off with a keynote from CEO Jensen Huang, top of next hour. Let's get more from Christina Partsenevelis in sunny San Jose, right? Christina, welcome.
Yes, NVIDIA has literally taken over this entire city. I'm standing right outside the SAP Center where Jensen Huang will be giving his keynote soon. But for years, NVIDIA's pitch was simple. One chip for everything. But unfortunately, that pitch right now is coming under pressure. The AI industry has shifted from just building models to running them, generating responses, powering agents that write code and answer questions. That process is called inference. We talk about it a lot on air. The problem for NVIDIA is that its flagship chips consume a little bit too much energy and don't carry enough memory to do it efficiently. Google, Amazon, Meta, startups like Cerebras working with AWS are all working on alternatives within the inference space. Today, Jensen Huang, the CEO of NVIDIA, will respond by providing possibly an announcement with Grok. This is an IP company, and they're going to be announcing an inference chip built on technology specifically from Grok. This is the startup that NVIDIA paid $20 billion for the IP, and it's going to have memory built directly on the chip, making it faster and more power efficient for real-time AI to address those inference concerns. He's also expected to launch an open source platform for AI agents, a collaboration with Intel, maybe about CPUs, and a deeper push into optical networking, which maybe could come at the expense of copper names. But Wall Street is largely expecting many of these announcements. The real catalyst might not be the products. NVIDIA's $500 billion order backlog is about 5 months old. If Jensen Huang, the CEO, updates that number and gives visibility into 2027, that's what's going to move the stock, Kelly.
Totally agree. I'm glad you put that up there, Christina. Thanks. We'll see you very soon. Christina Partsenevelis. Our next two guests say how Jensen Huang pitches the next phase of AI will also be crucial today. Let's bring in Nilay Patel, editor-in-chief at The Verge, and Alex Kantrowitz, founder of Big Technology newsletter and podcast, and a CNBC contributor. Welcome to both of you. Nilay, what are you listening for?
I really am looking to hear how we're going to bring inference down the cost curve. I talked to Google CEO Sundar Pichai about a year ago, and his message was there's nothing Google's better at than coming down the cost curve at running search. It's the same move for them in AI. It's going to be the same move for every single competitor that Google, OpenAI, Anthropic have. Anthropic, for example, right now the token prices are so high, people are saying, well, I can light up a bunch of agents. They start to cost more than the people that I'm trying to replace. That's a problem for the AI. It's a problem for white-collar work, all of the issues that are wrapped up in there. But unless those inference prices start to come down to make AI more competitive in the enterprise at scale, I think this market's going to hit some choppy waters.
Right. Although, just to follow up on that, Nilay, it seems like a company whose chips are sold out into next year doesn't have much incentive to lower prices.
I don't think they have incentive to lower prices. I think the question is whether the return on all that investment, one level up, is going to be there for these companies.
Right. Explain that a little bit, how that relates back to NVIDIA.
Well, so if you're running inference at whatever scale, for example, Anthropic is diversified, right? They made a big deal with Google to start using Google's TPUs in their cloud for inference. If Anthropic can move more of those loads to the cheaper chips that are cheaper to run, they might not actually have to use all of the NVIDIA chips for the inference loads that are starting to drive their business at ever bigger scale. And I think that's the risk for this entire industry, especially if Anthropic can clear the margins it needs to, because their models and tools are more useful than their competitors. I don't know how that's going to play out. We're only starting to see inference happening in agentic workloads at scale. And I think those are the big questions for NVIDIA in particular, as it enters a market where inference costs becomes the primary cost that drives the products themselves.
Yes, we're going to actually talk a lot more about this with Dan Ives next hour as well. You've really put your finger on it. Alex, what would you say about those concerns, and what are you listening for?
Well, I certainly think there is a concern about inference. This is something that NVIDIA's bread and butter is a little bit different than. NVIDIA has been great for training. And there was this idea that you were just going to wallpaper the planet. This is coming from the AI field. You'd wallpaper the planet with data centers, training these models. The more chips, the better the model you get. But we have had this shift towards inference where a lot of the best computing can be done after the model has been trained. And that's where you start to see this competition come in. But that being said, NVIDIA has seen this. And they're in a $20 billion partnership with Grok, which specifically does AI inference. And I expect to see some news on that front. To me, though, I think go ahead.
No, go ahead.
I think the most important message today is really going to be how Jensen frames AI to the country. This is the company's biggest event of the year, and AI is becoming broadly unpopular in the United States. An NBC News poll said 57% of Americans say that they think AI is going to have a more negative than positive effect on their lives. And then there's also this new poll that comes out of YouGov that says people are largely more negative than positive. And then finally, Pew has another poll that talks about how data centers are very unpopular. People think it's going to make their home prices, their home electricity prices go up. They think it's going to make their quality of life go down. And without the political support among people in the U.S. for this data center build out, NVIDIA is going to run into trouble. So I think Jensen is going to frame this as important for the country, good for productivity, good for things like medicine. And that's a key message that him and the entire AI industry are really going to have to get out.
I saw that poll. It was amazing. It was like the third least popular. It was only Iran and the Democratic Party, I think, that polled worse to that response. So it's a good point. We'll listen on the competitive note, but also not that it's a State of the Union, but kind of like a State of AI message where he does have the platform. And, you know, it was just a week or so ago, Nilay, I was thinking we had an Apple launch event. We didn't even cover it. We used to cover that wall to wall on this program. It's usually at 1 p.m. Eastern. We didn't do that. And look at us now covering this one like what Apple used to be.
Yeah. I will say Apple's launch event was pretty good. That MacBook Neo is pretty good. I bought one for no reason, and I think they're going to sell. They're going to sell a lot of those with an older iPhone chip in them. It says a lot about where the consumer is. To Alex's point, I don't know that Jensen is the right messenger to sell AI in data center build out. He's not the one making the products, and I think we understand what AI is as an enterprise product today. I think we understand the promise, particularly in software development, which is a huge and escalating cost for every company that ever glances at software. You just end up spending more money.
True.
They understand what AI is going to do for their software development workloads, for the costs in software. You know, SaaS CEOs keep coming on Decoder and telling me everything's going to be just fine for a reason. They understand the threat. We do not understand what's going to happen in consumer. We do not understand how OpenAI is actually going to make all the money in consumer to pay back its investments. And until someone starts making great consumer products, those polls are going to stay down in the dumps.
That's a great point. And, you know, I'm not sure if Sam is the right messenger. And every time Dario gets up there, he just scares everybody again. So it's like maybe they're still searching for the right voice. Maybe it's you two. Gentlemen, thanks for now. Really appreciate it. Nilay Patel, Alex Kantrowitz. And don't miss Jim Cramer's interview with NVIDIA CEO Jensen Huang tomorrow at 10 a.m. Eastern Time on Squawk on the Street. And he'll have more on Mad Money tomorrow night as well. Coming up, more of our exclusive sit-down with Treasury Secretary Scott Bessent. It seemed to move the oil price and the markets today, including the role that China could play in the Middle East. We're back with more, with WTI now nearing $94 a barrel after this. The price of oil is up more than 40% since the Iran war started. I believe we were around 68 a barrel then. Today, we're at 94, but we're under 100 where we were this morning before Treasury Secretary Scott Bessent told CNBC the U.S. is allowing Iranian oil tankers through the Strait of Hormuz. Let's get out to our very own Brian Sullivan, who sat down with Secretary Bessent in Paris. And Brian, in the wake of that interview, it's good to see you. I see trading notes that are saying, hey, the Strait of Hormuz is open.
Yeah, open-ish. I mean, it's been open for Iranian vessels carrying crude to China. That's been part of the problem. And a lot of ships, of course, have basically turned off their transponder, called an AIS, effectively turned off the lights and made the run through. But the new narrative is now, and you heard from the president earlier at the top of your show, Kelly, the new narrative right now is what help, if any, does the United States get with either the war and or shipping in the Persian Gulf and the Strait. And so let's start there. We had a 15-minute wide-ranging interview with Treasury Secretary Bessent here in Paris, following some China talks on that meeting as well. And we, of course, talked about the war, too. And I asked Treasury Secretary Bessent about the Strait, and he made a really, I think, poignant and important comment about U.S. military might and effectively the U.S. allowing Iranian oil through. Listen.
We are seeing more and more the fuel ships start to go through. The Iranian ships have been getting out already, and we've let that happen to supply the rest of the world. We've seen Indian ships go out now, so the Indians who rely very heavily on Gulf oil. We believe some Chinese ships have gone out. So that should start ramping up.
So this narrative here, Kelly, about how many ships, and you know, we've been doing it on your show and on Power Lunch, looking at that live map from marine traffic about, you know, how many ships, if any, are going through that critical. Look at that. You say it and it shows up. Best team in the business. Thank you. Well, there's some new developments on that at this hour. You heard from German Chancellor Friedrich Merz saying there is no plans for Germany to participate in the war. I don't know if that means the Strait of Hormuz as well or just the war. President Trump saying he is hopeful that Emmanuel Macron, the president of France, whose palace is about 2.5 kilometers over our left shoulder here, he is hopeful that they will participate. The UK kind of saying they're going to sit this one out. So I think right now, if I had to define everything where we are in 2 words, it would be coalition building. Can the U.S. build a coalition, Kelly? And if so, who would be in it? It sounds like the president is hopeful that the country we're in right now, France, will indeed participate. Maybe one reason oil's at 94 and not at 104 like it was last night.
Yeah, and Merz said, we will not participate. This is not a matter for NATO. I mean, he was pretty vociferous about that. We'll see if the coalition of the willing starts to exist. Brian, we'll see you in just a couple more minutes. We really appreciate it. Beautiful shot, by the way, Brian Sullivan, as the sun sets there over the Eiffel Tower. President Trump speaking just earlier this hour, he said the U.S. isn't relying on allies like France to help reopen the Strait. Listen.
I don't do a hard sell on them because my attitude is we don't need anybody. We're the strongest nation in the world. We have the strongest military by far in the world. We don't need them.
Let's bring in Jonathan Panikoff, director of the Scowcroft Middle East Security Initiative at the Atlantic Council, who in 2 minutes can unpack all of this for us and solve world peace. Jonathan, my brain is struggling because the narrative, especially from European countries, seems quite intransigent, and yet the markets are in a great mood today, and I see trading notes about the Strait being practically reopened.
Yeah, look, I don't think the Strait is practically reopened, and I'm not sure today's joyful response is going to last. Look, I think there's some response to Bessent. I think you saw the IEA chief also say that countries could put more oil stocks out from their reserves. I think that is possible. But the problem is the straits are not going to be reopening anytime soon in a meaningful way. And it's been a little head spinning, frankly, for I think almost everybody on the political risk side who's sitting there going, well, wait a minute, a lot of the Iranian oil that's being pushed out is also sanctioned. So, maybe you've got some coming through, the Chinese, the Indian ships, but the idea that now we're going to be settled and there's not going to be a problem through the Strait defies everything we know as the Iranian guards are continuing to use drones to really impose their own will of how they want the war to go.
Right, and you have the president who says, I'm trying to work with China and I want NATO to work with me, and Merz of Germany is saying we will not participate. This is not a matter for NATO. Look, I understand their point that they didn't start this conflict. The president's response to that seems to be, well, we helped you with Ukraine.
Yeah, I mean, I think that's right, and I don't think they're going to see this as a one-for-one on the European side. The reality is they're being strangled in their own energy markets now. I think we're actually quite lucky that this is March, frankly, going into spring and not November going into winter. They've already been struggling, there's a number of them, in terms of the Qatari decision to end the LNG production temporarily. We now know that the Emiratis, ADNOC, is not going to continue to offload from Fujairah, which is a really big issue after a drone strike there. That's going to actually cause some long-term challenges if this war continues for a number of more weeks. So I think all of that is putting the Europeans in a bind, and they're really frustrated. They weren't meaningfully consulted before the war started, and I think we're seeing the result of it now as we go forward.
The president, on the question of letting the Iran regime have a nuclear weapon, he said, you can't let them have a nuclear weapon. The Middle East will be gone. Israel will be first, and they will take a shot at us. So if that is his red line, so to speak, and he indicated as well, Iran wants to make a deal. They're talking to our people. If you take that at face value, or if you're listening for some sort of signs of progress behind the scenes, what might that look like with a regime that doesn't appear to be trying to come to any kind of conciliatory outcome here? But if the president says you can't let them have a nuclear weapon, what might they agree to?
Well, the problem is for the Iranians, they've always said that they have to have at least some level of enrichment, that was their own red line. And I don't see any reason to believe now, especially, frankly, with a lot of the former guard gone, that the new regime is going to change that. In fact, I think the new leadership and Larijani and if Mujtaba Khamenei as the new supreme leader are more likely to be hardline about that. They see it as a fundamental deterrence long term. And look, right now, the Iranians as a whole think that they're winning this war. For Iran, it isn't about how many troops they lose or how much their naval assets are destroyed. It's about, does the regime survive, and they do so in a way that has greater power projection over the long term. And if you look at where the oil markets are, if you look at where the Gulf is, if you look at where Europe is, I think they think they're winning the war. And so on the nuclear side specifically, look, I'm concerned because you still got 400 kilograms of highly enriched uranium that were buried after the June strikes that there's still no access to. At 60% enrichment, it could easily get to 90% to nuclear weapons grade. I think there's still a lot of questions here. I don't know if Trump is actually going to put troops in to try to get it. Right. That would be incredibly risky. But right now, going after the nuclear sites still makes a lot of sense. Copy that. The question is what comes next, because otherwise I think the thing is you're back here probably in 2 years, 3 years, and maybe that's the long-term play ultimately.
Yeah, no, and reading about it, they say it could take 1,000 special forces and impromptu airports to lift this stuff out and everything like that. Jonathan, for now, thanks, appreciate it. Jonathan Panikoff with the Atlantic Council. Coming up, we'll hit memory stocks leading the markets today, and Micron is set to report Wednesday. More details after the break. Welcome back. And shares of Micron are helping to lead the market today as tech outperforms. The company also said it plans to build a second manufacturing site in Taiwan. Our next guest says strong pricing for memory chips could continue to support their outlook. He raised his price target by $100 ahead of earnings on Wednesday. Srini Pajjuri is RBC Capital Markets senior analyst. So what is the price target now, Srini? Welcome.
Yeah. Thanks, Kelly. Yeah, we just raised our price target this morning because the demand is very strong right now and supply has been very tight. If there's anything that there are supply shortages, which probably continue into the rest of the year. So our expectation is that the pricing will remain healthy through the year and potentially into 2027 as well.
Is $525 now the target?
Yes, 525
okay,
is a new
so
target.
That's an $80 from here. We like to say on this program that it's probably not the case that the memory cycle is gone. I don't really buy that, but I do believe it could be years of upside, and then who knows on the flip side. Talk a little bit about that. When they're building out a second site, normally you might see the market sell off. They go, whoa, a lot more capacity is coming online. They seem to love it. The fact that they are bullish into extra capacity must be a sign that this is just there's so much demand.
Yeah. Well, look, I think demand has been very strong. There's no doubt about it. Just last quarter, the management said that, they're able to address maybe half of the demand, maybe to 2/3 of the demand from their key customers. I think that tightness is continuing. The one issue with this industry is that, it's a very long lead time business when it comes to capacity addition. So even if they plan something today, by the time we get actual supply, it's going to be a couple of years from now. And meanwhile, AI demand, of course, the AI capex has been very strong at hyperscalers, but also on a secular basis, the memory usage is going up. If you look at, NVIDIA's latest chips, the upcoming chips, we're seeing almost, 30 to 50% growth in memory content with each generation of GPUs. So that is something new that we have never seen before. So our view is that, this cycle has legs.
All right. Even if Jensen says something bearish, what if he says memory's on the chip now? We don't need it in 10 seconds.
Well, he still has to buy it. Yes, the memory that you're referring to, so-called SRAM, he can build it, but that's a very niche market. It's a very small market right now. Right. Over time, it's going to get bigger, but it's not going to replace the so-called high bandwidth memory that Jensen still needs to procure from the likes of Samsung and Micron.
All right, Srini, thank you so much. Glad we got to talk to you today. Srini Pajjuri. That's it for us. I'll join Steve Leisman for Power Lunch, and we'll see Brian Sullivan with more reporting from Paris and Treasury Secretary Besson after the break. Welcome back. Stocks are starting out the week on a high note as oil prices retreat, even as the Iran war enters its third week. Welcome to Power Lunch alongside Steve Leisman. I'm Kelly Evans. Brian Sullivan is on assignment in Paris, where he sat down for an exclusive interview with Treasury Secretary Scott Bessent to discuss China, Iran, energy prices. It looked like it moved the oil price.
He gets to go to Paris. He gets to interview the Treasury Secretary, and he gets to stand in front of the Eiffel Tower.
That shot was beautiful, wasn't it?
That's like jealousy times 3 for me.
He'll bring us back a croissant. We'll see him.
Yeah, if we're lucky.
The almond one, if you're looking.
All right, but right now, Kelly, stocks are higher across the board, which is great. All three major averages in the green among the biggest sector gainers, tech and financial. Speaking of tech, shares of NVIDIA are higher as the chip giant kicks off its annual GTC Developers Conference. CEO Jensen Huang set to take the stage at any moment. He's expected to offer insights in the AI race, NVIDIA's next-gen chips, and key initiatives for the company. We're going to keep a close eye on that.
Yep, as you mentioned, shares are up 2% into it. And as we mentioned a moment ago, crude oil prices are down today, although still way above their levels pre-Iran war. We did touch $100 for the first time since 2022 last week. WTI is now around 94.48 this hour. Keep a close eye on it, down about 4%. So let's begin in San Jose, California, because right now, NVIDIA CEO Jensen Huang taking the stage for the keynote address any moment. Our Christina Partsenevelis is on the ground to monitor that event and give us a sense. The market is excited going into it, Christina.
Yeah, excited because the stock didn't really move as much as it normally does the week before GTC. Usually that's a big upswing, so perhaps there's some buyers along with just the general upswing in the market. The AI gold rush, though, really has a new frontier this time around, and for the first time, I'm going to say it, NVIDIA isn't necessarily automatically the answer. As the industry pivots from building AI models to running them, rivals like Google, Amazon, Meta, Cerebras, which is a startup, are all selling or working on chips specifically designed for the job. NVIDIA's dominance is no longer a given. So right now, in the stadium behind me, Jensen Huang is about to make his case. Expect a new inference chip powered by Grok technology, which is going to be faster, leaner, and built specifically for real-time AI tasks like inference. And NVIDIA's GPUs essentially struggle with that part. There could be a potential collaboration with Intel on custom CPUs for enterprise data centers, so it could be a positive for Intel. And then NemoClaw, an open-source platform for AI agents that puts NVIDIA inside the software layer for the first time. And lastly, a deeper push into optical networking, really the plumbing that connects thousands of GPUs and increasingly decides how fast AI can move. But investors will be listening for something else and maybe only get it tomorrow. NVIDIA's $500 billion order backlog was disclosed over 5 months ago back in DC, and the company has only been guiding a quarter at a time. Any updated number and any visibility into 2027 really could be just as important as anything CEO Jensen Huang says on the stage behind me. Guys?
Christina, could you just help me out with what an inference chip is and how big a deal this is in terms of a quantum leap from the kind of chips that we maybe know what we're talking about?
Yeah, so the GPUs were originally used for training models. So think of it like you're going to take all of the encyclopedias and study every single bit in there. The encyclopedias are the training part. The inference part is when you ask your ChatGPT, please tell me the GDP numbers over, the last 20 years and how much they've deviated in a 6-month time frame. I'm trying to, cater to you, Steve, right now.
That's what I would ask.
That question, that query, that query is the inference part, which it can get more technical, but it's the part where it actually answers your question. And the chips needed for that part are not necessarily the same chips that were needed for the training part. And so that's why there's just this questioning around the role of GPUs on this second stage as well.
All right, well, thank you very much, Christina. I needed that explained. Did you know that, Kelly?
It was good. It was good. Well, I think that...
You're smarter about this stuff for sure.
Listen, there's the training. We all think about the training, like the amount of data center it would take to kind of just train the language model.
Yeah.
And then there's just the answering. And I think about our business, the news business. How does it scan to give you that up-to-date result and do things like that? And that, it takes a lot of compute, but not maybe the same kind or not as intensive.
So
but I think these are the questions.
It's like the back room of a restaurant versus the people who are up front.
See, he's got great analogies.
All about metaphor. As we mentioned, our Brian Sullivan, oh yeah, there we go. He's in Paris today, and wait till you see the shot. You'll know he's in Paris. He sat down exclusively with Treasury Secretary Scott Bessent there to talk China, Iran, energy, and much more. He joins us now with the highlights. Brian?
Yeah, Stephen Kelly, thank you very much. And unfortunately, just missed it. We got 5 minutes at the 7 o'clock here in Paris time where the Eiffel Tower is sparkling, but it's all lit up either way behind us. And listen, I think the president and Scott Bessent today, they're kind of hoping that maybe the oil markets are going to get lit up in a good way where perhaps the worst is behind us. We shall see. The market's trading, as you guys know, day to day. Oil, of course, fell down today a couple of percent because there is some hope, some optimism in the market that maybe we are going to see increased flows, which means increased supplies. I mean, the markets are focused on ships through the Persian Gulf and through the Strait, but really it's about what's in those ships, whether it's oil or liquefied natural gas or even helium for semiconductor production, some of the stuff that goes into what Christina just talked about. Anyway, Treasury Secretary Bessent was here earlier today at the OECD meeting with the Chinese.
What I do want to parse, and there's a false narrative out there, that if the meetings are delayed, it wouldn't be delayed because the president's demanded that China police the Straits of Hormuz. It would be
because there was a report out to that effect this morning.
That's completely false. So if the meeting for some reason is rescheduled, it would be rescheduled because of logistics. The president wants to remain in D.C. to coordinate the war effort, and that traveling abroad at a time like this may not be optimal.
Because that narrative is out there. So you're not saying that the meeting will be rescheduled, but you're saying that, and correct me if I'm wrong, please, sir, if it is rescheduled, it's because of time and travel, not because of a dispute over the Strait of Hormuz.
Exactly. It would be a decision President made as Commander-in-Chief to stay in the White House or to stay in the United States while this war is being prosecuted.
Because you're a markets expert, obviously, longtime market participant. The markets may react to any word of a delay, pause in the meeting. And you're saying if this meeting is paused or delayed, the market should not react, assuming it's some conflict between the two nations.
Absolutely not. We had a very good two days here. We'll be issuing a statement in the next few days, and we'll be reaffirming the stability in the relationship between the first and second largest economies in the world.
So we'll see if that meeting happens, and if it is happening in April, and if not, you heard what the Treasury Secretary said about maybe the reasons why. The other issue, obviously, of course, is all the ships in the Persian Gulf going in and out, filled with the commodities that are moving the markets. And we asked the Treasury Secretary sort of about shipping lanes and about what might or might not happen. And he used, I think, some rather interesting language regarding the U.S. and Iranian ships, or at least ships filled with Iranian oil.
We are seeing more and more the fuel ships start to go through. The Iranian ships have been getting out very heavily on Gulf oil. We believe some Chinese ships have gone out. So that should start ramping up before there are any the flotillas or protective armadas in the Gulf. So we think that there will be a natural opening.
A little technical difficulty. Team, I'm gonna go ahead.